Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right. Good morning, everybody. Hope you're doing well. Welcome back. We've got some pretty big news here this morning. We've got core PCE numbers, which, on a week like this is potentially very market moving. Whenever you get these like very, very volatile weeks, economic data becomes usually more sensitive. Like yesterday, we saw big responses to unemployment claims, and with all the tariff headlines and just news events in every direction here, the market is sort of fragile, if you will, and it was already fragile to the question in regards to inflation. Right before we had all the back and forth on are tariffs good, are tariffs bad, what are they going to do to the market? Before we had all that, we have had this sticky inflation problem, and we've covered it on the show a lot. But just as a refresher, we do have rising CPI up to 3% now. So inflation has, I wouldn't say like it's become a major problem. We added this little indicator. Someone in our chat the other day, I guess it was the other week, recommended that we added the 2% reference line for target inflation rate. Specifically, most Western central banks target a 2% inflation rate. With us at 3%, what we've seen here is we've had the Fed kind of struggling to get down or even stay close to that 2% target level. We are on a longer term basis now seeing inflation remaining problematic for the United States. At 3% inflation, it's still there, right? Sure, we're not at 8%, 9% inflation, but we're still significantly above the target inflation rate. I want to think about this for a second. You may say, well, what's the big deal? It's at 3% and the target's 2%. That's not that far off. Well, think about it. It's actually a 50% higher than target level. Inflation is significantly higher than where the Fed wants it to be. And, the issue with this is not only is it higher than where the Fed wants it to be, but it's headed in the wrong direction, right? So as we look at this market, which is worried about tariffs and worried about geopolitical stuff and what have you can throw the kitchen sink in there. I mean, there's a lot of stuff that people are concerned about in the market. You can add into that mix that inflation is on the rise. Now, inflation is on the rise, and yet the 10-year yield has actually been falling. Why is this? Well, part of the reason for this, as we've talked about on the channel a good bit, is that you actually have 10-year yields falling, I would argue, mostly on weaker economic data and perhaps some of the tariff concerns in the market, which could be growth. It's really a growth scare. I've been saying this for a while, and a lot of the things that I say on my channel, I repeat. It's part of trading to repeat yourself quite often. But a lot of people are like terrified of tariffs being this massive inflation issue, where I think the real issue with tariffs not to say that they are good or bad per se, but the real risk to some of the, kind of changing the trade war dynamic stuff is actually growth concerns. If you really substantially change the landscape for trade, in my opinion, yes, could there be some short-term inflation bumps? Possibly. But in 2018, we didn't really see a big bump in inflation the last time we had tariffs. What we did, however, see is some concerns about growth in the economy, right? Because if layoffs happen, et cetera, if that happens, it is an if, it's not a for sure it will happen. But if that happens, that's where the market says, oh, we might have some growth issues. Maybe treasury bonds yielding high 4% up here were actually a good bargain. Why don't I get some bonds at these levels before I can't? That's, I think, what is kind of happening in the bond market right now. And the bond market is really important to the rest of the market. Today we see, kind of a dust settling a little bit from yesterday's sell-off, but don't get too comfortable. With 10 minutes to go, PCE inflation numbers could definitely make some ripple effects in markets. We'll see if it does. It has the potential to, doesn't mean it has to, but this is definitely the event of the day. I don't know what's going on here. Hold on. I just want to get to, can I go to the economic calendar? There it is. So here we go. We have core personal consumption expenditures coming out. Forecast here. Let me zoom in a little bit. Forecast this morning is for 2.6%. Previously it was at 2.8. It's expected to come down. The question is, will it actually hit those numbers, or will it surprise them one way or the other? That's the big question. So here's the way this works, right? Generally, the idea would be, if you get a low PCE number, the Fed's going to like that. Going to say, hey, look, we got some progress on inflation, and we're seeing some slowing in some economic prints. Maybe we have room to cut rates this year. So you want to see that number. If you're a rate cut person, if you're a gold bull, if you're a stock bull, you want to see 2.5. You want to see 2.4. You want to see low, non-threatening inflation. If you're somebody who wants the dollar to go up, right? If you think inflation is not going anywhere, if it's going to rise, you're looking at wanting 2.7, 2.8, right? That's the way to read this is, if you get sticky inflation, that's bullish for the dollar because the Fed will be less likely to cut rates. And if you want, a risk on rally to maybe proceed or to bounce here, Bitcoin is desperately, for example, wanting low inflation. Bitcoin is in a trouble spot. We've talked about this chart. I said a couple of days ago, the chart looks broken. It looks more broken now, right? Look at this. I mean, this is a true, first in a while, I would say, risk off move. We're seeing risk assets truly take a little bit of a hit. If you haven't been trading that long, this may be a little bit of an eye-opening period for you, and that's totally okay. If you're new to trading, also, let's do a fun thought experiment for everybody watching right now. Comment in the chat here while we're watching or while we're streaming here. If you're with us when you're live, comment how long have you been trading for? And there is no shame if you're a new trader. I'm not trying to gatekeep or shame you for being new, but I do want to just make you aware. If you're brand new to this stuff, if you're still kind of getting your feet wet and figuring this stuff out, it's a hard journey. I'm not going to lie to you. I will be as honest about that as possible. It's very, very, very hard to become a profitable trader, and it takes a lot longer than you might think it will. If you're anywhere under 2-3 years into your trading, there's just a lot more to ever learn than you think. But look, here's the thing. If you've been only trading for a year or two, you have not really seen a risk-off true market environment. If you've been trading for anywhere under 2 years, 3 years, you've only really seen this environment. Context being NASDAQ has been in a strong uptrend for a couple years now. Very strong upward trend. If you've traded longer than that, you may remember 2022. That was a rougher year. You may remember the steep sell-off where a lot of people got crushed in 2020, right? Chasing crypto, meme stocks. So my point is, if you found the market to be a little bit more what is going on in the last few weeks, then you may just be experiencing for the first time what risk off looks like. And that's totally okay if you are shocked by what it looks like. What I would encourage you to do is go back test some risk off environments, and it will be very eye-opening to you to show you how hard trading is. Here's the thing, right? If you are somebody who is only used to a market where it only goes up, right? When the market starts no longer working that way, it can completely wipe you out, right? So you've got to be aware that when markets turn, they turn pretty violently. Look at Bitcoin down another 4.5% today. And that's not 4.5%, from the highs. No, we're talking about at this point, Bitcoin has now entered into 25+% drawdown territory. And here's the thing, Bitcoin can get much worse than that. Do I think it will? I don't really speculate like that on Bitcoin. But as long as we continue to see the sort of headlines that we see, Bitcoin could keep just pummeling to the downside. To me, this is not something where I'm stepping in and I see, a short-term buy the dip trade, right? I don't really see that right now. I think you had a really proper sell-off. You had a really strong run-up, couple months of consolidation, and now key support breaking to the downside. Bitcoin looks like an ugly chart. The stock market, kind of in that choppy market. I wouldn't call this a totally bearish market at this time, but if you start seeing support break at 5,800 for S&P, we may actually be in the start of a bigger correction. I'm not calling for a stock market crash. I know my titles and thumbnails are pretty aggressive. I am aware, but it's YouTube. I gotta. We do a lot of work on these videos, so they get seen if I put fun titles and thumbnails, but they get very little views, and all our work goes to waste if I don't put some fun spice in the thumbnails and titles. But I don't think the market is going to crash per se, but there is some risks here that have not been present for some time. Wow, thank you very much for the 100 rupees. I'm a new subscriber to the channel. I love your analysis. Can you shed some light on the yen basket? I'm waiting for a pullback on it. Great question, and absolutely. Yen, speaking of all of this risk on, risk off stuff, right? When we take a look at things like, we can actually look at JXY. This is a great way to look at the Japanese currency index across multiple other currencies. You can see recently it's had some pretty good momentum to the upside, and serving its role a little bit as the traditional risk-off currency. People are flocking to the yen. We've talked about this quite a bit in recent videos and live streams because, the Japanese economy looks on a relative basis pretty strong, right? You have strong GDP growth compared to forecasts up to 0.7. We talked about this yesterday. Europe's at 0.1% GDP growth, right? So Japan at 0.7 is better off, at least right now. We have services PMI coming in really strong, showing some optimism about the economy. Retail sales, 3.9. Inflation ticking up to 4%. So they've got inflation over there. It's looking like the Bank of Japan is going to hike rates. Seems like the Ueda, the big boss man over there for the Bank of Japan, wants to try and do it in a way that doesn't disrupt the rest of the globe. He's a Western ally, if you will, but still, that dynamic of hiking rates for Japan makes the Japanese yen look strong relative to other currencies. They have some very different circumstances than perhaps Europe and the UK and perhaps even a little bit of the US, which is seeing a little bit of contraction. So yeah, I mean, for me, the yen looks strong. I've been in the yen trade for some time. I'm also trading the same dynamic by being long TLT. It is the same concept. It's a risk-off kind of pure play, being long bonds on the idea that, okay, economic data reads are contracting. I pay attention to that stuff, right? So this being all red makes me kind of like something like TLT. So I have TLT in my portfolio, which is very similar to being short some yen pairs. They typically move very correlated, like dollar yen and pound yen. The yen basket tends to trade correlated to TLT. Anyways, guys, we've only got 1 minute to go here, so let me make sure I switch over, and I don't want to miss the core PCE news. It does have potential to seriously move markets one way or the other today. Could move it a lot, could move it a little. Just depends if there's a surprise here on the news. Guys, we've got a lot to go through today. There's 700 people watching between everywhere we're streaming. If you could do me a big favor, hit the thumbs up button and support our work here, I would really appreciate that. Don't go anywhere after the spike. Things get interesting after the spike because we can actually interpret what the data tells us and what new trends may be forming on the charts. Stay tuned. Breaking news coming in just a second. Okay, 10 seconds to go. Let's see what we get. Core PCE drops in just a few seconds. Okay, so PCE came in 2.5 as expected. Okay, so pretty much like I mentioned, if inflation does not give you a big beat or a big miss, it's not likely to move the markets too much. Let's see if there's any surprise, last second moves here. But for the most part, 2.5% inflation. That is technically, 2.6, 2.6%. Which marries up nicely to forecasts. So we've got 2.6. I'm sorry, I'm getting mixed up. Hold on. Month over month. Core is what we're looking for. There it is, 2.5. Okay, so 2.5%. So inflation, not too hot, not too cold, coming in pretty much in line with expectations. So that may move the market a little bit, but probably not going to seriously make massive, massive headlines today. So that's why you probably won't get a huge move, at least off the impulse. Let's take a look here a little bit closer. S&P 500 up 0.2%. So gaining back just a little bit of the lost ground from yesterday. NASDAQ went from down about 0.3 to now just about flat on the day. The Dow Jones up about 0.4 now. Russell here about flat on the day. The DAX up 0.2. Japanese stocks actually sold off pretty heavy in the overnight session here, so quite interesting there. And China stocks actually also took a little bit of a hit in the overnight trading session. Gold here down, actually breaking support here at the 2880 level. Very curious to see how this closes today, guys. If we get closure underneath this level, I know there's a lot of gold traders in the audience. This is a pretty big level that we've talked about here for the short-term bulls. Here's the thought process. You've had a really good run up in gold. It's been an incredible run here for gold. It's pulled back to this area a couple times, found support. Buyers were able to kind of reload and push it higher, but we'll have to see how the candle closes today. I wouldn't call this just bearish just yet, because you could see this kind of candle close today. If you get that kind of close, gold, in my opinion, looks good for a possible continuation. But if we close underneath this level, then I do think that gold probably has more room to kind of correct back down towards this previous all-time high. This is just, you can see how quick trends can kind of go from just never-ending upside to breaking a key level, and then the market kind of pulls back. The best example I could possibly think about that right now is Bitcoin. I mean, look at what happened. You had a beautiful break through this level, and as soon as that chart closed underneath that level, it was just a waterfall lower. So, we'll see. Is gold going to have a similar type reaction here to a key level breaking? we'll see. I am still bullish on gold overall, but waiting for price action to kind of align with my theory here that gold could go higher. I've been bullish on gold, been bullish on silver. I'm no longer in either one of those positions, but watching for an opportunity to rejoin the trade. So going to watch that close. Let me just filter my thing here a little bit. I'm going to remove minor currency pairs for a moment. So, and then we're going to remove, let's see, neutral readings. So kind of a thinner watch list here today. We've got dollar yen. Well, most of the yen crosses, actually, I can add this back in. Minor currency pairs. You can see the real strong read here. Part of the reason I am long TLT today is Swiss yen, Kiwi yen, dollar yen, CAD yen, Aussie yen, Euro yen, all getting bearish reads on the edge finder. So I do like yen bearish setups, specifically like shorting these ideas. I am already in a position on that one. If we do get larger pullbacks in the yen, I'd potentially be interested in adding to those trades. But as we speak, I'm kind of in a profitable position. I shorted Swiss yen around this area, and I'm still in that trade. So I'd like to see if we can actually head back down and break through those lows, which would be great. But if we do want to go test higher levels, I wouldn't mind actually adding to the trade. This is more of a long-term idea for me as long as the fundamentals continue to look strong for the Japanese yen. Again, this bias is coming from the edge finder's calculation here. Looking at key economic data, we do see yen kind of dominating right now. So I like that story. I'm going to stay with the trade. I've got several winning positions running on the yen and TLT. So we'll continue to watch that. Silver and gold, like I said, looking for pullbacks there. Pound pairs looking interesting. I actually want to see what happened with the pound here recently. I like this pound dollar move that we're seeing recently. It's quite interesting. You've got this break to the upside. Only risk I would see here is that this is usually going to coincide a little bit more with a risk on kind of rally. The pound being kind of the higher risk currency of the two. But we'll see. I mean, it does look good for a possible break and retest of this 1.25 level I've been talking about. So we'll see. Yeah, so I'm really curious. I've said this a couple days in a row, guys, and it's been interesting to watch. The stock market has been something to watch because what you've had is these intraday attempts to move higher met with selling pressure that is pretty violent. So you've had these pops in the morning and then drops following through the day. Same thing here the last 2 days. Pops met with selling pressure. Pops met with selling pressure. I mean, yesterday was massive selling pressure that followed through pretty much all the way to the close. So with this Friday, I mean, you may have some follow through here to the downside as people may want to de-risk for the weekend. That has been a theme here this year. A lot of Mondays have been very, very red for the U.S. stock market. So it's possible you may get kind of another repeat of that event. That being said, I'm not looking to short this market. I'm on the sidelines. I'm pretty cash heavy. If this thing rips up without me, then it wouldn't be ideal, but I've kind of missed a lot of this selling, which has been great simply by not having a position. So I'm kind of on the sidelines. I do still think that, momentum right now in the short run favors the bears. I mean, look at this hourly chart and you can see the pattern that I just described. You have these big sell moves, these kind of weak retracements, big sell moves, retracement, big sell moves, retracements. So are we going to see this kind of retracement here that's now forming follow through once more? That's been the theme. Let's see if that theme continues or if it breaks the trend. But kind of interesting to watch. You've also got, like I said, gold breaking down for the first time in a while. You've had for the first time kind of actual follow through to sellers. But let's see, I would say if you get a nice strong close today, back the other direction, that would actually be quite bullish for gold. So we'll watch it. We'll see how that ends up playing out. Silver actually holding up a little bit better than gold here today, down 0.3 rather than gold's 0.72. Quite interesting there. And Bitcoin trying to bounce a little bit from those. It went down into the 70s today, which is crazy. Absolutely crazy. By the way, guys, if you want to try out the Edge Finder, I mentioned this tool earlier. For many of you guys, I imagine this is your first time on the stream. If you've never heard of the Edge Finder before, it's a great macroeconomic data scanning software. It also allows you to track institutional money. Later today, Later today, guys, if you have the Edge Finder, head over to your COT data page, and you can actually watch the latest data get dropped into the Edge Finder. It will import that this afternoon. We'll be able to see what institutional money did this week. Did they buy the dollar? Did they buy gold? Did they sell gold, right? Did big money sell out of gold this week? That question will be answered in the COT data coming out this afternoon. So if you want to try out the Edge Finder, the link is in the chat right now. You can click this link, get a 30-day trial of the Edge Finder, sign up for it there. Just fill out that application, and we'll send you over some information about how you can set up a trial. Is silver back to bullish territory on the Edge Finder? It is, but personally, I'm just going to watch price action. So today my job is, okay, I like gold and silver on the long side, but I don't like price action at this moment. You know, we've had a couple instances here where you've had key levels come into play, sellers broke them, right? Key level, broke them. I don't love that silver is selling off alongside the stock market. Same thing with gold, you know, both kind of getting some sell pressure following suit with that. So I'm sidelined right now on silver. I'm watching gold. So I like possible entries to the long side. I am bullish on these things, but waiting for price action to give me the right setup that I'd look to enter. If I take any trades, you'll see them inside of our Discord server. And if you'd like information about that, you can send us a direct message on our website to sign up for our VIP membership. If that's something that you're interested in, if you'd like to trade alongside me and the team, you can sign up to our VIP group. We'll drop a link here in the chat to where you can speak directly to our support team, or you can head over to a1trading.com/VIP and find out some information for yourself. But yeah, click the link being dropped if you'd like to speak to us, and we can get you information on the memberships. Stock's pretty muted following that core PCE number. You know, it came in line with expectations. I think that this is kind of a market right now where you needed some good news to really derail this selling pressure. And my concern is, again, I want to clarify. I listened back to some of my videos here recently, and I've been saying a lot that I'm not bearish, but I'm certainly not bullish either. I do want to indicate that I'm not, when I say I'm not bearish, what I mean is I'm not looking to short the market. But in terms of where I think markets are going right now, I do lean bearish for which direction. I just don't want to try and time that. I don't want to try and, you know, place a trade on it. I do, however, think, and I've been saying this for a while, you know, as we reach back towards those all-time highs, I was really not interested in equities. And, you know, we've seen some downward slide. I am looking to buy the dip on certain names, certain stocks that I like and things like that, but I'm just not in a rush to get long the NASDAQ or long the S&P 500. You know, it kind of goes back to this year. One of the better plays that I've had has been long TLT. I know I keep talking about this, but part of the reason was as simple as looking at 2018, where we had tariff wars going crazy. You can see what really happened at the turn of the year 2018, 2019. TLT had this massive upward move as people got all worked up and nervous about what was happening in, you know, between China and the US. At the same time, during 2018, we can see what happened with the US stock market. You had some pretty large correction activity. And so that's where, when I look at this, I say, okay, look, in 2018, we got a 21% correction in the S&P 500 with all the trade war stuff that was going on in that circumstance. And meanwhile, this time around, I would say that Trump is more aggressive on the tariff stuff. He's going after a lot of countries. Do I think that that is the end to the global economy and that it's going to be the end of the world? No. I think that, as mostly seen in markets, usually people are more scared than what is actually realized in terms of what happens in the real world. Like, most people, the market is like more terrified of something happening than what usually actually ends up happening. I think that's probably the playbook here as well with tariffs. But 21%. And I think we're being pretty aggressive this time around as well with the tariff stuff. It brings me today, we're only off the highs at a peak of less than 5%, right? 4.7 or so percent. So that's where I'm not in a rush to get into this market. I think that there are some great opportunities to buy a dip in the market, but in the short run, I do think that we could see for the S&P 500, we could see a 7% pullback. We could see a 12% pullback. We could even see a 15% pullback. And I would still say that this market is very still positioned to overall do quite well in the coming years. So I'm just kind of looking at this circumstance as okay, if the market really panics, if it really freaks out, great. There's some buying opportunities that I will be taking advantage of. But again, to say I think we're at the bottom of the move, I don't personally think we are. We'll see if I'm right. Maybe I'm dead wrong. And if I'm dead wrong, what I've learned over the years with the markets is they can always trick you, right? So just because I think we may be not near the bottom, like I think we may actually still have more room to go lower, just because I think that doesn't mean that if it starts to correct or start to trend back higher, we get some more reassuring data, that I won't change my mind and look to get bullish sooner. Right now, I just have an issue with trying to call the bottom on this move because we've been in a consolidation phase, so we don't have this like clear momentum, and we have a lot of headlines that are worrisome, I think, in the short run. So when it comes to stocks, like I said, I remain kind of neutral in terms of my action. I'm not looking to short. I'm not looking to aggressively long either. So I may pick up some individual positions like stocks that I like, things like that. If we do continue to dip, that's kind of the plan. I'd like to buy some more Tesla shares. That's something I've been talking about. I actually sold a put yesterday inside of our Discord. I sold a put at 260. So if this market continues to roll over, or if Tesla and Tesla goes with it, I would get assigned at $260 per share. That's something I'm willing to get some shares at. So I signed up to buy more Tesla shares if this market continues to go lower, which I think, you take a look at Tesla, look at this stock. I mean, this stock is down 42% from the highs. It's a pretty good correction already. So I like the stock long term. I like what they're doing with robotics, with the autonomous driving stuff. I think the cars are incredible. The battery business that they're in, to me, it's a company that is ripe for building into the future. But it gets overhyped. You had this massive spike on, oh my gosh, Elon Musk, Trump, they're gonna be best friends. I do still love the company, but I'm happy to see it dipping because it can actually give me an opportunity to buy some shares at better prices, in my opinion. So, not financial advice. Do your own research. I'm not here to tell you what to buy or sell. I do what I do. You do what you do. Do your due diligence. Be careful. Markets are really hard. You can lose a lot of money. Be safe. That is my opinion. I like Tesla on the long side. If I can get a bigger discount, I will probably buy some more shares, or I will buy some more shares because I sold a put. If you don't know what selling a put is, I'm not going to go into the in-depth kind of nature of that. But when you short puts, you are essentially saying, if I get put the shares, right, if it keeps going lower below 260, at any point it is at 260 or below, the person who bought the put can assign the shares to me, and they can close out of their position. I am willing to play the house in that regard and basically buy their shares at 260. So anyways, we've got our next segment here starting in just a moment with Kinzo from Extra Hot Forex. He's going to be joining the show to talk a little fundamentals following this core PCE number coming in pretty much in line with expectations. Not too much market volatility here, not a big move in either direction for stocks, for commodities. We'll talk about all of that with Kenzo in just a moment. Just a quick reminder, we are doing our Edge Finder giveaway this week, and today is the last day to join. If you have not joined the Edge Finder giveaway, it is completely free to join. All you have to do is join our Telegram channel, and we just dropped the link to join the giveaway. Today is the last day. So click this link that's just been dropped in the chat, join our Telegram channel. We've hit a really high number of subscribers recently, so welcome to everybody in there. We're dropping bonus clips in there. We're dropping Edge Finder charts and all sorts of value in our Telegram channel. It's one of our New Year's resolutions, I suppose, is to get the Telegram channel to be probably one of the best on the internet in terms of fundamentals, technicals, all sorts of value. So join us in the Telegram, throw your name in the hat. You might win a copy of the Edge Finder today. So why not? Okay, real quick. We're going to roll a quick break. And then up next, we got Kenzo joining the show to talk fundamentals. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we're back with Kenzo. Hey, Kenzo, how you doing, man?
I'm doing great. Thanks, and you, man?
I'm doing well. It's good to have you back on the show. We do this every Friday. We go through some charts. We talk about fundamentals, and man, we have a lot to talk about here, Kenzo, with everything that's been going on. Stocks have had a big slide here recently. Tariff stuff, getting kind of the market all worked up. I'm wondering your thoughts on this, because of course we had the inflation data that came in pretty much in line with expectations. But we've had, like I said, a very big drop in stocks here in recent days. Do you think that this is a buy the dip opportunity, or do you think stocks have more room to the downside?
I can say it's 50-50. I think we've been actually on the overbought side for quite long now. So remember, the market started to go aggressively high when Trump started to win, I think from November, December there last year. So we stayed there for a quite long, and the market never reversed that much. So I think now maybe there is profit taking. We just had the NVIDIA earnings, which were not really bad, but actually there are challenges, especially from China. So it shows that the road going further is not going to be as easy as we thought, especially on the AI side. But for the stocks, especially indices, I think we were overbought, and actually the market has to reverse here and there so that we can actually easily buy on the lower side. But if it continues like that, it means maybe there is more.
Yeah, no, I actually, when you take a look at the weekly chart, it definitely has had a pretty incredible winning streak. In terms of, as you mentioned, perhaps on the longer term time frame, it's gotten a little bit overbought. I think we're in the process of maybe starting to work that off. But as you mentioned, long-term overbought means that in the short run, we could have some bigger pullbacks, and maybe those are bigger kind of long-term pullbacks that could be opportunities for traders who have missed out a lot of the run here to the upside. That's my opinion on it, at least. I did also want to just bring up a chart here, Kenzo, for us to chat about for a moment. I mentioned this, maybe you saw it or maybe you didn't, just shortly before you joined. Back in 2018 and 2019, when the tariff concerns were really kind of hitting the markets back then, we did see the stock market make a corrective move of over 20%. That's a pretty big sell-off. And the reason I think that I'm kind of with you on the 50-50 stay cautious, stay patient side is if we scroll to today, what you can see is that we've only worked off about 4 to 5% from the peak. So my concern here is that this time around, Trump is seemingly more aggressive on tariffs with China, with the EU, with the UK, Canada, Mexico. He's going after China. He's also going after a lot of our allies. So, my question here, and if those things ultimately resolve, as I think they probably will, there will probably be some negotiations. There will be some good news at some point. I do think that that
Mm.
is in the longer term not going to crash the market forever, but in the short run, maybe there is some room to get to a 10%, a 15%. Those are very normal pullbacks in the long term. We look at the weekly chart. There are many instances in bull markets where you get 10, 20% pullbacks, and the market can still recover just fine. But to think that we couldn't have more downside from here, I think would be a little naive. I think it is not certain either direction, but perhaps there is a little bit more correction that we have to do. I don't know. We'll see.
Yeah. Plus, on that, to add on the structure, sometimes we don't really need bad news to see the market selling off. Sometimes we might try to search for something which is going to be bad, but you might find that everything's actually cool. But
Mhm.
along the way, everyone can see that, oh, the market is actually like overbought. One way or another, there will be some serious profit taking, especially let's say this year going to next year, the AI thing is going to be maturing. Last year it was still at the beginning stage. Even this year it's actually at the beginning stage. So going next year, maybe we're gonna have self-driving cars. We're gonna have human, those robots and stuff. So maybe this is the beginning, but for that to happen one way or another, if maybe you own some shares for some companies there, most of them they are performing very well, and you have to rebalance your stocks. By
Mhm.
doing means you will be cutting some profits on other stocks, which means we might see those sell-offs. But when you check, there's nothing actually wrong with the market,
Mm.
because even if maybe we check the tariffs, I think it's also a good thing. Now the excuse might be, oh, the tariffs, this and that might fuel the story of sell-off, but it's not actually the whole thing. It's not actually the whole story to see that sell-off. To me, I
Sure.
think if you check this bullish move that we had for now, I think this is the longest move that we had without a serious rejection.
Mhm. Yes, I
So
mean,
yeah.
very little. If we take a look at the S&P 500 specifically, I mean, this is incredible. We've gone so long without a 10% pullback.
Mm,
Going from October, I believe, until now, we have not had one singular 10% or greater pullback. The closest thing we
exactly.
did was actually right here. And if we take a look at this, I suppose it was 10%, but it wasn't really. This is hard to call a 10% because what actually happened on this day, the August 5th day, this all happened in the overnight futures market. We gapped down and then quickly blipped. And before the markets even opened, we were already back kind of up. So maybe you could call that a 10%. But I would say what is factual is we have not had a 10% close, drawdown in very, very long. And it's normal. It's normal for good market environments to have 10% pullbacks. So, we're kind of due for one. Is this going to be it? We will see, but it certainly is starting out pretty aggressive. The first time I would say in quite some time that we've actually had, some follow through to a downside move. Most of the time, we've seen just these dips get immediately bought, and now we're
Mm,
seeing how this level reacts. I mean, for me, Kenzo, I don't know about yourself, but I don't really like to short the indices very frequently. It's a very difficult trade, very, very difficult, even in bear markets, because the way they move is they move violently lower, and then they have these
mm,
violent spikes, violent lower, violent spikes. So it's just a very loud, uh, wild chart to try and short when markets are in free fall. So I don't really usually short the market, but I do stay on the sidelines and just have no position. To me, that is kind of my way of saying, I'm just going to wait. I'm going to wait for a setup, preferably on the long side. But we're at a level here, Kenzo, where the S&P 500 5840, really big support level. A lot of traders have this level on their watch list. What happens if today we actually close down? We've been seeing this pattern, big sells, and then the next day a little bit of a blip higher, big sell, blip higher, big sell. What happens if that happens today again, where we get the stock market opening in 30 minutes and markets tank through the lows? Where do you think we go from there? Do you think we have the potential to see something like a 10%, 15% pullback?
Yeah, I think it's possible. It's possible to see that, but uh, even though the market is not really opened yet, I think we're going to see some strength there. So it shows us that there is not enough bullish momentum in the market. So I'm expecting maybe to see a sharp sell-off maybe before we go higher. Maybe you see on the second support, the market might reach there. And or maybe we might reach that 10%. Maybe let's say go into next week, we might have those sell-offs. But at the moment, I'm also not really confident looking for a buy at the moment, even though I'm not going to actually look for a sell, but looking for a buy, sometimes it will be like being greedy, but I just have to wait for a clear market structure, because the way I see it, or with the evidence that we had before, when you go back, there is enough chance that we might get some serious sell-off before maybe we see some sharp move again.
Yeah, no, I think it's, I'm in the same camp. I'm more comfortable just waiting and seeing, because I think, waiting could also mean missing a move like this. And look, if I'm wrong, if we do get a sharp bounce and some better news hits the headlines, we start to see this kind of move, then maybe I'll reevaluate and maybe I'll look for some opportunities to get long again. But, I think right now it's just hard to say where the bottom on this move is, and I'm trying to avoid jump in front of a falling knife here. So I'm just going to wait it out, see how this support level plays. If you do get a nice bounce here, then perhaps there is some bullishness in the short run, and that 5% pullback is all we're going to get. But I think that I want to just be a little bit cautious and patient on this. Another question for you, Kenzo, is gold breaking a pretty kind of great win streak to the upside here. We've now seen a level of support starting to break. What are your thoughts on gold? Do you think gold, are you looking for pullbacks on gold? Do you think the run is over? What do you think?
Yeah, actually, I've been waiting for this type of a move. Because where we were, like that smaller support, that actually it was not really that strong enough, or the confidence was not really enough for me to continue buying there. So now I think I'm just waiting for the market to go a little bit below, maybe around 2.8. I think there I can say, yes, that it's a reasonable reversal. But another thing, when you check geopolitics, I think it's today, Trump is going to meet with Zelensky. If maybe they find the solution, which means the tensions out, they will be cooling off, that it's actually bad for gold. So we might see gold starting to continue going even lower. So I'm also waiting for that. I just want to hear the outcome. But it seems like they are going to reach a deal. It might not really be easy, but as long as we have a clue, I think that might be the start of that sell-off. But beside that, the gold was also like overbought. We never had that rejection for a while. Since last year, November, I guess, we had that rejection. Now we're getting another one, which is good. So I will be expecting 2.8, where I can say, yeah, I'm expecting it to reach there. But if it goes below that, it means maybe there must be some fundamentals going on.
Yeah. No, I think that's a totally rational way of thinking with this. The move, clearly we all knew that gold was stretched. It was due for a pullback. It just took a lot longer than most people would think it would. That's typically how it goes in markets. People think, oh, it's overdue for a pullback. It's overdue for a pull. It finally has started to give a pullback. And with this pullback, like you said, we had this level of support. Looks like if we close the candle like we are today, to me, from a price action perspective, that tells you that the short-term momentum here has faded, and that we may actually be due to see a larger pullback. And I too am watching. I think a lot of traders are probably watching that 2,800 to 2,775 range of key support, going back to that late October, early November all-time high peak for gold. So, I am a buyer of this on a bigger dip, and I'm excited to finally see an opportunity to trade gold to the long side on a proper dip. It's very difficult to, you feel like you're chasing on the way up. And then, you finally get the pullback. And whenever the pullback finally happens, this is just how it always goes in markets. Is like it never pulls back. And then all of a sudden it pulls back very sharply. It's very, very all of a sudden there's your move. And you have to be ready and you have to be patient for it. So we're starting to get that move here, I think, for the first time in weeks and weeks and weeks. Gold is actually seeing some follow through. Let's see if it can get down to here. It could fake out at this level. I said this earlier in the stream, but I personally think that if you get a close today that actually looks like this, then perhaps this level actually does hold and we move higher. But right now, not looking very promising, with gold actually tanking through those lows, continuing to push lower. Maybe this is a little bit of PCE, but to your point as well, Kenzo, maybe this is also geopolitical resolutions making gold lose a little bit of its risk premium factor with Russia, Ukraine, and the United States maybe coming to the negotiation table.
Exactly. So yeah, I think it's actually been very long, and I actually like what I see now. So because I've been waiting, so buying, it was not really a long term or swing trades. But now it's happening, and once you see something like this, you're supposed to smile, because we know that once it bounces back, obviously it's going to be a very bigger move. So which means we're going to be in for a little bit longer. But still, we have to understand the reasons behind that. Will it continue, or maybe there is just a nice reversal? If it's a nice reversal, it's also good, but at least we saw a proper reversal, unlike before, because before we saw that support, it was not really that strong, but we saw that the market was still respecting that. But now, at least we might have that confidence.
Yeah, and Kenzo, I wanted to show you just an updated view of our economic heat map here today, just because I know you and I use this sometimes when we're discussing, just to kind of get a big picture view of where things are at. PCE has not updated. When it comes in, it will be at 2.5%. So this will be updated shortly. But what we see here is GDP numbers came in this week about as expected. So that has changed. But most of this chart's still kind of showing red. This is part of the reason for me with indices. I'm pretty cautious. The economy seems to be at least not running so hot, beating expectations by so much at this time. Doesn't mean the economy is crashing for the US. It just means that the US economy is not maybe beating everyone's expectations at the moment. So that to me also signals, if we're missing expectations a little bit, I actually like the idea of being long gold for that very reason. So, we've also talked about this rising concern, Kenzo, of stagflation. What are your thoughts on that? If we see inflation still sticky, but growth metrics continue to weaken, how would you trade that environment?
Yeah, I think it's very difficult, especially we never had that on my time when I trade.
Yeah.
We never had that situation where we have like stagnation. But at the moment, it seems like inflation is going to stay or stick for a very long, because we can see the numbers. Sometimes they go a little bit up, but at least this month they were slowly cooling off. But
Yeah.
before, they were actually trying to resume going up again, which was not really good. But at the moment, I think maybe they will be cooling off, maybe going to March. But if they continue, I think we are. I don't know how do they measure stagflation actually. How long is 3 months or 4 months or something like that? But if we stay like that longer, that is not really good, because the higher the inflation, or let's say inflation is going longer for a longer time, that is going to be way too bad for consumers, especially with the tariffs. I think tariffs also had the effect, but it seems like at the moment things were performing very, not really that bad, but we'll see maybe March or the other month, or what is going to happen.
Yeah, I mean that's the challenge here is that we added this reference line. I mentioned this earlier in the stream. We had a live stream viewer mention that we should add the target inflation rate, and I think it's a great visual to add to this chart because what we can see is that this is the Fed's target, 2%, and
Mm.
we have not actually reached the target even once. We came close and have now been trending back up. So I think you're very correct in pointing out that we are now entering into long-term above trend inflation. Like we're not back down to two. It seems like this has been a 5-year project for us if we think about it, right? Going back to COVID,
Mm.
we just hit the 5-year anniversary of the COVID starting point, if you will, the breakout, and 5 years later, inflation is still above trend and still sticky. The Fed is talking about the Fed officials have been very hawkish here, saying they can't really see a reasoning for cutting interest rates at this time. So
Yeah.
that it definitely poses some risks to the market that the Fed doesn't really want to cut rates, and you have these tariff concerns at the same time. You can understand why we are seeing the market pulling back. Doesn't mean you want to get permanently bearish or terrified and never buy the dip and run away from stocks forever. But we do have to
Mm.
acknowledge there's a good reason that markets are selling off, and perhaps waiting and being patient might actually be the best call we could make right now. But I could be wrong about that, but that's my opinion. I feel like we wait, we let the dust settle a little bit, we see how markets react to all this stuff, and then maybe we find some opportunities.
Yeah, I think you're right on that. Another thing is mostly for investors or traders, so during this like January, February, up let's say up to April, mostly
I think we might have lost Kenzo. Hopefully not. I think he's frozen. Kenzo, if you can hear me, you may just want to just refresh your end of things. Hopefully it's not me. I don't think it's me. All good. If Kenzo joins back, we'll make sure to bring him back in. Stream is fine. Okay. Yeah, we'll bring back Kenzo if he hops back in here. But either ways, just in case Kenzo lost internet for good there, let me just make sure to quickly drop his link in the chat if we could. Chandler, appreciate that. Guys, Kenzo is a long-term supporter and contributor to the A1 Trading Show, which is what we do here every day. We bring on guests, we bring on analysts from all around the world. Do me a big favor. Make sure to go subscribe to Kenzo if you enjoyed his commentary. I really enjoy speaking with him every week, and I watch some of his videos as well. So I encourage you to do so. Do the same. You can always learn something from somebody. That's the whole purpose of the A1 Trading Show, being a collaborative kind of experience. So always appreciate our guests, and I ask that you guys go show them some love as well, as they come on completely for free. We don't pay our guests to come on. We compensate them, I suppose, by helping them to grow their content because we believe their content is worth watching. Okay, so just going to continue. We may or may not hear again from Kenzo. We have stocks here, not really making big moves here one way or the other, but you gotta think. I mean, with the kind of selling pressure that we saw yesterday, NASDAQ down at 3.2% or so. I mean, that was a serious sell-off yesterday. We'll see if there's any bounce back today, but I'm a little bit hesitant on as if you've been watching for the last 20 minutes, I've been ranting about how I'm cautious on this market, but I've been cautious on this market at the all-time highs. I missed some of the move higher, and I said, you know what, I can't justify chasing this market higher with an economic heat map that was looking like this, right? This is just that's not my trade. My trade setup is not, okay, US economy is missing a lot of expectations, let me go buy the stock market, right? Now, if you get serious sell-off and people start really panicking, then I think there's some contrarian buying setups that you could get in on in some long term. That's my opinion, not financial advice, but that would be how I approach it. Is like if you get larger, swift moves to the downside, maybe there's some opportunities there. The Edge Finder, the U.S. economic heat map is, guys, we have some really exciting stuff for the heat map. I'm just going to tease this. I don't know. I'm not supposed to show you guys this, but we're going to do it anyways because, why not? You see this? See what we're looking at, guys? New and improved, not fully done, but will be prepared and shared with audience members or Edgefinder users pretty soon. New and improved economic heat map. We've added some features. This is not done yet. Like I said, we're still working on it, but I can't help myself. I love talking about the features that we're working on and programming and stuff. So I'm just going to show you. We got to center it up. We got to add some stuff over here. We got to finalize some of the data points, center everything. Some stuff still has to get done. But the new economic heat map, the new and improved variation, I think is much easier to read. We have everything listed very neatly. We also have added, as due to our customer requests, the previous number has been imported and will automatically be updating as well for our customers. So what we have here is we have actual, now previous, forecast, change, and by popular demand, we've separated a US dollar specific impact for each metric and stocks impact. So I'm really excited about this. This is not yet functioning, but we have got it in the works. So the idea here is that by pulling up the economic heat map, you'll be able to see the actual values, the previous values, the forecast, the change from those forecasts. And if you're an FX trader or you focus on gold or you want to look at the US dollar impact, this will show you bullish or bearish for each or every metric. And then for stock traders or index traders like myself who can't get away from the NASDAQ, there will also be a specific column showing you the bias for that. I'm really pumped about that. This is something, and I shouldn't have showed you this. Whoops, I'm doing it again. Look what we got. Look what we got. What's this? AU economic heat map, Canada's economic heat map, Europe, Japan, UK. A1 Trading, you guys have outdone yourself. Round of applause. No, but we have been working really hard. This has been a really popular new feature. A lot of people are excited about it. We love having all of it on one page like this, and we are going to. It's going to look perfect pretty soon. Anyways, new tool, new features will be dropping shortly. We're working on that today, probably next week, I'm hoping. If you don't have a copy of the Edge Finder, you'd like it to try it for 30 days, I'll drop a link here in the chat to where you can sign up for a 30-day trial. You can get some information by clicking and filling out this quick application link that we're dropping right now. Also, if you have questions, if you'd like to hear about payment plans, if you'd like to hear about our inclusive pricing for developing nations, send us a direct message on our website right now. We'll also drop the link to chat directly to our support team. We have 3 great people on our support team who help traders technically 4, but 3 customer support reps that can help you if you have questions about the tool, payment options, payment plan options. If you're interested in getting our data, unlock it right now for a super discounted rate by sending a direct message to our support team with the link just been dropped. Okay, guys, up next, we got Forex James taking over the show. Of course, a regular contributor. But before I bring on this James, I do have to make just a quick and special announcement for our very own James in the office. It is his birthday today. So if you guys could, yeah, there you go. Birthday music. Happy birthday, James. If you guys could do me a big favor, drop some happy birthday, James, in the chat. Let's make his day, because he certainly helps all of you guys and myself by making such great content for the A1 Trading crew. Appreciate that, James. You're the best. Happy birthday. Up next, we got Forex James taking over the show. Stay tuned.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share edge finder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
Hello. How is everyone doing? Just going to move my camera down a little bit here. There we go. Okay, cool. So, has everyone had a good week? I guess that's the main thing. And yes, happy birthday to A1 Trading, James. Great guy. Sean, Tom, Bashi, seeing some familiar names in here. It's always nice. Rushan, I'm good. How are you doing? Markets have been very rough this week. I think it's been one of those weeks where you either lost money or made money. In my case, lost some money this week, but yeah, it's the nature of the job. Fortunately, not every week can be a great one. Although, having said that, this is going to sound a little bit weird, but I don't really agree with the markets at the moment. And the reason I'm saying that is because it doesn't seem like they're running off global macro. Really, it seems purely just fear and greed. So we are seeing yen down, we're seeing the dollar up, we're seeing commodities down. I would say that's essentially the opposite of where the economics are pointing to. Obviously, the yen economics are very bullish. The dollar economics aren't very good. But what we've had is obviously clarity on tariffs, which is causing the dollar to gain strength. We've had a real hit on the euro, real hit on the Swiss. The yen's taken a hit as well, as we've seen inflow into the US dollar. Obviously, that's causing two effects on commodities. So if we have a look on gold, the reason we've seen the commodities take such a big dive is because we saw a lot of uncertainty in the markets leading into a lot of the Trump period. So there was a lot of uncertainty around tariffs. Are they going to get implemented? Are they going to get changed? What's going on there? Now we've got a bit more confirmation. We've got 25% on Europe. We've got Canada, Mexico, and an increase on China as well. So that uncertainty is kind of gone. So that's why I would suggest that the commodities are down, but I'm still bullish overall. I'm definitely not looking to sell them because I don't think this is a sustained move. I think it's profit taking, a little bit of repositioning, and then we will continue the bullish run. But don't quote me on that. That's just my idea. I could be completely wrong with that one. Habib, I'm 26, but it's not my birthday, so I'm not sure if you're asking the other James. Sean, not necessarily. We can have very boring weeks where bulls and bears can make money, but this week it seems like it's basically just been a bear week. Japanese rate cut was a hawkish rate cut. What do you mean, Siobhan? They've not cut their rates. They've been hiking rates, so they were in negative interest rates, and now they're at 0.5. So they're not cutting rates. So there hasn't been a hawkish rate cut. You missed me. I missed you too, Bashi. DXY crashing. Patel, the dollar is not crashing. It's just having a little pullback, and that is to be expected. I would be very surprised if this doesn't get corrected, to be quite honest with you. So it's not crashing. It's having a little bit of a relaxation after a pretty, a relatively large move, actually. This is obviously the H4 timeframe. It moved almost 1%. Which for a currency is quite a lot in such a short space of time. James, look at the Australian dollar, US dollar. Thoughts on DXY up or down? I don't know. I'm a little bit unsure with the dollar, and I'm going to show you something here. So I've shown this before, but I'm just going to visualize it for you, so it might make a bit more sense. So if we go over back to Trump's previous, Trump's previous period in the White House, 2016, 2017. So he came in November 2016. So let's say roughly around here. We take this chart and we go all the way down here. So this is the candle pattern we saw 2016, 2017. If we line it up on the dollar index here, it's almost 1-to-1. Now, this isn't some secret. I think a lot of people are looking at the historical move of the Trump dollar index. So are we looking to get some sort of huge downside now on the dollar? Maybe. I wouldn't say so. Yeah, I think it's very early to say that we're going to have some sort of dollar crash or dollar dump. But it's, of course, something to keep in mind. I don't think anything really is here to drive that idea just yet. But in the short term, either the dollar corrects the move and comes down towards 106, or it completely breaks through and we start creating fresh highs and create a new short-term uptrend out of this downtrend. Obviously, I'm basically saying it can go up or down because I don't really have much of a bias on the dollar just yet. Jan 2017, Sean, yes, but the market obviously knows he's coming in November because that's when the election is, so I'll take it from there. Any chance gold will go back up next week? I think so, but of course I can't say for sure. Looking fresh and white. I'm the guardian angel of the markets today. You think GJ falls to 185? Let's see. I think the yen crosses are going to fall. It's just a matter of time. The thing is with the pound, we're having a little bit of a different situation there. So the pound is essentially tariff proof, which is providing it quite a lot of support at the moment. But that's not going to be a long-term driver. I would highly doubt it. So yeah, I would expect all of these major yen crosses to head to the downside. So even dollar yen at some point. Obviously the yen is down today, but the long-term idea on the yen is definitely bullish. It's the only major central bank that's hiking rates. So there's a huge divergence there. So once we start seeing the markets relax a little bit from Trump, I would assume we're going to get a pretty serious carry trade unwind going on. Sorry guys, just reading what's been said here. I'm trying to keep up. New heat maps looking great. Yeah, I saw that actually. The heat map does look good. It's funny because I made my own one last week, and now A1's coming out with one, so I guess I'll ditch mine and use theirs because I have to update mine manually. It's a bit of a pain. Thoughts on Swiss pairs? I think Swiss is going to the downside, so XXX Swiss will be to the upside, and vice versa. So that's why I'm short Swiss yen, and I think dollar Swiss also is a great play, but of course we need to have some positive dollar data to really drive that one for the long term. I think actually the idea I previously had on dollar Swiss was actually all the way back. I should put it on the monthly time frame here. So we've got a lot of room to correct this. In the grand scheme, this looks like it could actually be a bottom. I mean, that's a very optimistic way to look at it, or whatever you want to say. It's a bit generous possibly, but maybe even just back up to 1.17 potentially. We'll see. James, if you have time, share some insight on your experience with Edgefinder, how to improve your trading. Roshan, I think it's a top search when you search Forex James on YouTube. That my Edgefinder feedback is like the #1 thing there. So feel free to do that. But the Edgefinder is great. You can use code ELITE for a discount. Helps me out. It helps you out. You get a discount. I get a kickback. So it's a win-win for everyone. Talk about JPY news last night. There wasn't really any news. I mean, we also had CPI, but it wasn't a great deal of interest. It slightly dampened a rate hike idea, but not in any major way. They're still going to hike rates. It's more just a slowdown or a little tiny negative crumb. How is it possible I have a short position on dollar yen, all the data points down, and I'm still in a loss? That's the thing, Loris. This is what I was talking about when I first came on. I don't really agree with the markets, and obviously that's it can be a very naive and a very silly thing to say at certain times. But in this specific situation, I just don't. The markets just aren't moving in coordination with where data is going, which is why I'm not really too concerned about what's going on at the minute. Again, I could be completely wrong. Maybe next week or the week after, I'll be sitting here, asking you all to forget that, but we'll see. I think at this time, I will stand on that seat or stand on that ledge. Thoughts on euro pairs? I'm still very bearish on the euro. I don't see much there. I think euro pound is one of the best trade ideas I've got actually at the minute. I don't really have any way to enter, but tariffs obviously on Europe, Eurozone data generally is still pretty poor. Definitely no position to start buying that. This ECB is also cutting rates. So I think if you just line up what the central bank divergence is, so if we look at euro yen downside, euro pound, great one as well, euro dollar down, euro AUD also has some potential to the downside. So yeah, that's basically it. My idea hasn't changed, euro shorts. So yeah, in terms of actually getting in on euro pound, I would like to see a little bit more of a bullish move. Now, I think I said this on yesterday's stream, but the problem is with euro pound is it's very, very difficult to trade based on just technicals, or sorry, to get in based on technicals. And the reason is because it very often just completely invalidates typical support and resistance levels. So like here, great resistance, it blows through it. Bear in mind, this is a daily candle, so it did reject off here, but sometime after. Here, I guess you've got pretty nice resistance, but obviously if you're looking short term like the H4, this resistance is great, and you would have got stopped out on that move. So it's just a very volatile pair, or a very erratic pair. So I'm just waiting for some reason this market will pop to the upside. It could be news in a month, it could be next week, it could be tomorrow, or not tomorrow, it could be Monday. But either way, I'm looking for the next aggressive move to the upside on euro pound, and then I'll start looking to go short. Yes, that is true. We are at a monthly support on yen, on the yen pairs. So selling it where it is a little bit risky. You're being a bit greedy. I am very certain that support will break, but you might get stopped out in the meantime. Ball out. It's good to see you here. Sorry, guys. I feel like I'm missing some messages here, but I'm trying my best. Just saw the Elite Traders links being dropped in the chat. So for anyone that does want to join Elite Traders, we've had a little bit of a shift in our pricing. So we've now got a 7-day free trial. There is, cancel anytime. So if you do want to try it out, you can, no cost. If you don't like it, just cancel. What do you think on the impulse wave down? Ball out. I was saying this earlier, so I won't go into it too much, but I don't think this move is sustainable. I think it's a sort of panic fire sale by large participants taking profits due to more clarity on tariffs and a little bit more certainty in the markets, but I'm still very bullish on gold. So whether it breaks this sort of previous support area doesn't really matter. I'll still look to buy at the next major support. No, Bash, you can't spam M1 trades. Well, you can actually, depending on how many there are, but there is slow mode on, so if you spam too much. Australian dollar yen sells. Any idea for profit target? Let's see. I like the sell idea. So let's have a look. What can we see? I mean, it depends how long you want to hold, because I would be pretty happy to say possibly down here. If at the time the economics are still supportive of the downside, then maybe down here. I think you've got a potential to have a really, really good runner if you can just sit through some short-term noise. I mean, again, if you're looking for a shorter-term trade, I would say the bottom of this wick that was formed back in this was the start of August 2024. So this was obviously the basically the end of that carry trade unwind when we saw the sort of flash crash. I'm with you. Then we will take buys. Just now managing the trade. Oh, ball out. Are you short? Well, I assume you are short. Yeah, I think silver's on its way to $35. I would say gold is on its way to beyond 3,000, maybe 3,200, 3,300, maybe. Again, I don't really know. No one knows, but that's just what I would assume. I'm still very bullish on metals. It's just this week has been what do you call it? Like a roller coaster. Well, actually, it's not been a roller coaster. It's been more like a waterfall. Mad how yen did that move. Yeah, it's been tricky, and if there are any new traders here and you have managed to either mitigate risk or adapt to the markets, then I take my hat off to you, because last week was almost completely different. Last week was very bullish yen, very bearish dollar, very bullish metals. It was, very smooth, really. And this week it kind of flipped on its head. So new traders, well done for anyone that did manage to not lose their accounts. Patience helps. It does indeed. I saw someone talking about investors earlier. Are they still here? Does anyone want to hear about how to get an investor as a retail trader? Or is that person left and no one cares? If no one cares, we talk about something else. But I think it's good for people to at least slightly understand, because it's something that will come across your mind at some point. This week's been choppy. Choppy is a nice way to say it. Okay, Bashi wants to hear. So you've got different options as a retail trader. Now, I'm just going to start this off by saying not advice, because I do not want anyone to go out and do anything because of this, but it's just general sort of from my experience and for what I do understand about regulations. So you've got option one. If you want to manage capital, the only way to do it really is either signals or when I say signals, I don't mean Telegram signals. I mean, you can actually do professional signals where you write a thesis, send it as a PDF, almost like a bank report, and it will be to higher net worth clients, or you can do copy trading. But they're kind of the only options if you want to be able to make money from telling people about your trades. Otherwise, you're going to need regulation. Now, regulation comes under a few different ways. You can do umbrella. So actually, this is specific to the UK. I don't know about other countries. But essentially, this is another company that does have a license and will put you under their license, but their fees can generally be around 3K a month, maybe higher, depending on which regulator you choose. Which umbrella you choose. Option 3 is to actually get regulated. The problem is with regulation, again, this is more UK specific, so I don't know about the US or anywhere else in too much detail. In the UK, regulation will cost you around £250,000, because you need to have a fully regulated risk compliance guy, basically, obviously, to make sure you're in line. To hire someone like that is going to be very expensive. You need to have £120,000 in capital ready to go. And you will need to obviously do the exams. You'll need to get the obviously the qualifications as well. That costs quite a bit. I can't remember the exact amount. Or the fourth way, and this is the shady way to do it, is go to somewhere like the Cayman Islands. And the Cayman Islands had much lighter regulation, but I'm not going to go into that because you can do your own research there. But that's the breakdown. So you cannot touch investor capital unless you have regulation. You can give your ideas, again, as signals, but the general rule is if the investor cannot choose the trade, you cannot do it, which again is why signals are a way around, because an investor can choose to take that trade, so it's on their back if it loses. Whereas if you are if you have their money in your account, you take a trade and it loses, they had no control over that, so they can sue you. Oh, US is around 250 as well. Interesting. So the US, I know my consultant is regulated in the US, and I think it's Series 7, Series 65 he's got. But again, I don't know much about the US. And again, I'm just going to clarify, this isn't financial advice. This is just my 2 cents on the topic. So, if you are wanting to go down that road, get a professional. How do you get JP Morgan bank signals like on your website? It's a secret. I get bank reports from a secret source, and we put them in our Discord for our members every day. Yeah, Bash, unless you want to take a trade on the 1 minute, write a PDF, email it over, and then the trade's done by the time they've even opened that PDF, then yeah. What's going on in the Forex market now? Can someone tell me? Yosef. There isn't that much actually. It's quite a linear market at the moment. It's basically just running off tariffs. So we're seeing we saw a pretty large inflow into the US dollar. Obviously, cause and effect is outflow from other currencies. So the Swiss, the yen, the euro. Actually, the pound did very well because the pound is not getting tariffs, or the UK is not getting tariffed. Europe is getting tariffed. Canada, Mexico are getting tariffed. China's tariffs were increased. So it was kind of, the markets have just been running off the back of that news. So metals are down. From my opinion, they're down because there's more clarity around tariffs now. There's not so much of an uncertainty in the markets. So yeah, dollars been dominating, the pound's been dominating, all the others are pretty much down. How do we get copy trading license? You don't need a license to do copy trading, but you will need to get a lawyer to do a contract, because again, that's a very gray area, and you are still very liable to lawsuits unless you have a competent lawyer to put something together. With current geopolitics and tariff implications for EU and not so much on the UK, could we potentially see GP USD and EU USD go in separate directions, considering they're highly correlated? Yes, but not for a long period of time. I mean, they are pretty much moving opposite directions, aren't they? I've not checked pound dollar actually. They're not really, are they? Are they? No, they're still pretty similar. I wouldn't suggest there's going to be much of a divergence between the two. Although, again, the UK is not getting tariffed, which was a big bonus, but it's not a fix. That's not. It's just some good news, but it's definitely not going to fix the UK economy or anything. So yeah, I wouldn't really expect much of a change in market behavior for those two. That's interesting, James. If I ever get to that point, definitely shout you. It sounds like something I might be interested in. Yeah, I mean, I run copy trading, but it's it's a little bit tricky sometimes, because if you get into that world, you have to stay up to date, because regulations can change, and it's not going to be a headline news. So you have to go out and do the work to make sure you stay up to date and everything. Where can you get copy trading investors? You can do two options. You either go out networking, you want to find high net worth clients, so you would go to somewhere that people would be like that. So this is going to sound very typical, but it's true. You would go and sit in a airport first class lounge, have your laptop open, show just doing chart work analysis, or you would go to pay $200 or $300, go to the highest class gym you can, go and talk to people. You just go out and talk. Network with people. It's very straightforward. Or you can build an online social media presence, but you will get lower capital clients, which won't really be life-changing amounts of money for you. Ball out, you are right. It is a slippery slope. If you're not a good trader, unless you want to capital, you should be a hedge fund manager, so it's licensed. Yeah, ball out, that is very true. It's definitely not a career. I would say is worthwhile doing, to be quite honest. If you are a profitable trader, just focus on yourself. Or if you have the opportunity to get regulated, then go for that. But it's not as a just a retail trader, I wouldn't say that's the best way to do things, really. My non-compete with JPM ends in April. I wonder if the copy trading route is possible. I don't know, Alan, because yeah, I mean, I run mine just through MetaTrader. It's very simple, straightforward, but I'm sure you could work something out. If you've been at JPM, you should have some sort of network that would be able to help. Lose 2% in my account this week. Marvin, 2% is completely normal. Don't stress about that. Yeah, 2% is a very manageable amount. So it's normal. Just make sure you didn't make mistakes to do that. If it was just the markets being the markets, you were taking out, normally, fine. But if it was due to, if you risked 0.1% and you lost 2% because you're overtrading, then that's a problem. So just make sure you're not doing silly things. Taking a challenge to get funded, hoping I'll pass. Good stuff, Wanda. I hope you pass as well. I think copy trading and brokers is a thing to make people lose money. You know what, Loris? It's not. I have a PAM agreement with Blueberry. I don't do it, but I do have the agreement there, so I can do it if I want to. Trust me, it's not like that. I know the Donvo thing was a huge sort of conspiracy theory startup for a lot of this. It's like, the brokers do it. They paid Donvo. Trust me, they didn't. That if a broker like Blueberry or 8cap or any of these large regulated brokers did it, trust me, they would be losing so much money through fines, penalties, possibly even shut down. That would be a pretty big thing for them to do. So anyway, let's get back to markets. My ideas haven't changed too much, to be honest. Like I said, I'm not really a fan of the markets at the moment. I think it's not macro driven right now as far as I'm concerned. So there is nothing for me to do. So the most interesting thing really will be to see how the start of next week goes. So the end of this week, obviously, so basically for the rest of the day, and how Monday opens, how Tuesday continues will be sort of the biggest factor to my trading. I'll see, are the markets still on this, the path they're on that they have been for the past sort of 1 to 2 days? If they are, I'll stay out. If it's not, and we start seeing reversal, so the yen starts creeping back up, the dollar starts coming back down, then I might start getting involved again. Jack says, James, what can I help you with, Jack? You're going to hold until the market gives you a wave? Hold what? Maybe, I mean, generally, no, because I don't really trade like that. If I still have a reason to be in the trade, I will stay in the trade, or I'll reposition to make sure that I'm managing risk correctly. But I'm not waiting really for the market to do anything. I'm just managing as I see fit. Anthony, hello. So yeah, the idea on oil, I would still say to the downside. I don't really have anything that would make me buy oil, to be quite honest with you. We've got a really nice level here. So if we could get a higher high to form and a higher low, that would indicate maybe a short-term change of trend. Maybe I'd look to buy. But to be perfectly honest, the way the markets are looking at the moment, I would say possibly down to sort of $64, $65 a barrel. And that might be a little bit much, but overall, I would look to sell oil. I'm not going to be looking to buy this. I was a buyer in oil during this period here. I got taken out very quickly, so I'm not looking to get back in anytime soon. Chick-fil-A. Sounds good, Alan. See you soon. Looking to sell pound CAD if I get an opportunity. Why? That's what I want to know. Why do you want to sell pound CAD? But yeah, anyway, top setups on Edgefinder. We've got still. Oh, actually, the DAX has fallen off, which, yeah, it's not a surprise. I wouldn't really want to buy the DAX just now, especially after the tariffs. UK 100, I would imagine, is actually quite a good long position at the minute. We have got. Oh, we had more spending on. Was it more spending on defence? I'm not a stock guy. I'm not 100% sure, but I know the UK government was allocating an extra 3% to something. I know that benefited the UK. Oh, sorry, the FTSE. We've also got rate cuts by the Bank of England, which is beneficial for the FTSE. We got the pound still reading bullish. Got silver, gold, and then the yen crosses remain bearish with euro pound mixed in there as well. So it's pretty straightforward on the surface until we actually look at the markets and they're just not doing what you would expect. I think the pound is actually the only one that is moving in a sort of sensible way. Take a look at Australian dollar CAD. Okay. I would like to say it's long, and the reason is because it's been hit by metals as well. So it's the sell-off in gold and silver. I think copper as well. No, I haven't really looked at copper, but it has definitely been impacted by the drop in metals. So if I'm still bullish on metals, I would lean towards bullish on the Australian dollar. We also had the hawkish cut previously. It looks like they're going to be holding rates. Canada just had tariffs put on them as well, or confirmed. So I would really like to be long on this market, to be honest. And maybe now would be a good opportunity, but I'm not ready to buy just yet. Maybe if we can get an H4 bullish close here, I would consider it. But yeah, just now, I need a little bit more confirmation because this sell-off was very aggressive and it does look like it's slowing down slightly. But yeah, I'm not taking that risk. Is FTSE DAX? Anthony, no, the FTSE is the UK index or the UK stock index. So this is the FTSE and the DAX is the German. So it's top 40. So different things. We've got UK and Germany. What do you think of Roger Banks? I'm not going to give my opinion there. It's not obviously not my YouTube channel, so I'm not going to discuss that type of stuff here. If you go on my stream on Monday, we could have that conversation. But yeah. FTSE sounds kinky. It does actually. When you spell it like that, I don't like it. So I think I might might ignore that word going forwards. Yeah, all I'll say, there's a very shady past from what I've seen, and I am going to stay away from the rest of it. Jack, how can I help you? Oh, Euro Australian. Okay. Yeah, bearish on Euro Australian as well. I'm already in 2 short positions actually here. So you can see I took 1 short, scaled into this short. I might be looking to put 1 or 2 more shorts on as well if we can start approaching the highs at 1.7. The euro again is very bearish. We've got a rate divergence, central bank policy. So yeah, this market to me looks very overvalued. The RSI is overbought. We're reaching previous resistance on the daily and the weekly actually. So I'm quite happy to be in these short positions, even if it runs against me for a little bit. It's no problem. I like the trade to hold potentially back down to sort of 1.6 roughly. So yeah, remain short, but it's not for the weak of heart or the not for weak hearts at the moment. Nick and his team are the real deal. Ball out, I agree. Any strategy can be profitable. I agree, actually. You've just got to apply the law of statistics, and it makes sense. Not heard of that person, Ball out. No idea who that is. But yeah, Euro pound, sorry, not Euro pound, Euro Australian, more than happy to just continue shorting. I might close out this first position because it's quite low now relative to price. So I might just close this one and bring up average price slightly, get into some higher shorts and just leave it to run. Because like I said, the way I'm viewing the markets at the moment, it's I'm tempted to say fake markets, but that's a bit of a dangerous term to use, but it seems like a little bit of mispositioning so far. We will see. Again, I could be sat here next week looking like a complete idiot, but I'm willing to take that risk. Okay, sweet. What was I going to do? Oh, yes. Let's look at COT. I've not checked the COT report in a while, actually. It might have changed. Gold's still bullish. Silver's still bullish. When was this updated, though? 21st. So we're due for an update. Actually, the next release will be interesting to see what their latest movements are, or the most up-to-date movements are. Gold doesn't surprise me that it's down, because I've discussed this previously, but the situation with gold was that we saw they were closing out long positions. That's one of the reasons I was more happy with silver and gold. So we saw them reducing their long positions slowly. So from 90.4, 90.2, 89.6, 86.8, 85.3, 83.6. So we could see them gradually reducing some of their long holdings. Whereas silver, it was the opposite. We saw them actually adding into silver longs. So we can see 71.1, 71.7, 72.9, 73.6. So it was a good little indicator. So yeah, gold isn't a surprise, but silver seems to be following in the footsteps a little bit. Hi James, curious, but why close and get a better price if you want to enter EA positive swaps as well if you hold long term? Well, it's just the strategy. The thing is, with the strategy I've implemented here, if it runs up, all the way up here, this position is just unnecessary drawdown, when I could just exit that and use that extra margin to enter here, and then it would make up the loss there. It reduces drawdown, so it's just a risk management strategy, really. James, I'm in AUD USD buy. Some advice? No, can't give you advice. I can give you my thoughts, though. Guys, don't forget, if you click that link, you can join Elite Traders for 7 days completely free. So why are you in a buy on Australian dollar, US dollar is what I want to know. Because even before this move, it wasn't a bullish market. The long-term trend's down. The dollar has been dominating for quite a while. I'm not really sure why you would want to buy this in the first place. If you're stuck in this, you've got two options. If the drawdown is reasonable and it's manageable and it's not causing you any problems, I would just see, I would look to hold it a little bit. So if you can get some sort of pullback, then look to close. Or if you're in a bit of a bad spot in terms of margin or whatever, I would just close it here, because this market could continue down for the rest of the day, or it could reverse. I don't know. But that's the rule. If you never want to put yourself in a position where drawdown is sort of a concern. Oh, you're chasing a pullback. Yeah, that can be dangerous to try and chase the pullback. Psychology plays a huge role in trading. Yeah, slightly. I would disagree that it's the biggest thing, because, I think we had this discussion yesterday, so I won't go into it here, but, psychology doesn't move markets, fundamentals does. So as long as you're not an idiot, then, follow the trend is your friend. Ah, Jack just said it at the same time. There you go. I don't really have much going on, to be quite honest with you. So if there's any requests, let me know. But yeah, I don't have anything that I'm looking at that I can tell you about, to be perfectly clear or perfectly honest. So happy to break down some things. But actually, Swiss yen. I guess we haven't looked at that one yet, have we? So Swiss yen remains very bearish. The edge finder is still signaling the most bearish or very bearish. The yen fundamentals still looking pretty bullish. We don't have a Swiss heat map actually, so I can't show you that. But the Swiss is still not in a great place. They had a tick down in GDP. Their inflation's coming down, which reinforces rate cut narrative. Looks like they're going to be holding rates on the next decision, but then cutting potentially back down towards zero, maybe even negative. Obviously, we've got the complete opposite move with the Bank of Japan with their sort of holding and hiking plans. So, it's now a case of just waiting for this break. If we can get that, perfect. I think we're going to see sort of a pretty aggressive continuation to the downside. But until then, it's just a fight between bulls and bears. There's nothing going on. Just sideways, boring range, unfortunately. Suggestion for risk management in gold. No, because I'll be honest, I can't give you any suggestion for risk management because it depends on the way you trade. You could be an investor, you could be dollar cost average, you could be a scalper. It's very risk management is a very sort of individual thing. Can you talk a bit on what should be a good time to enter a trade over reversal? So if you're doing sort of, I'll be honest, reversals are very, very difficult. If you're trying to catch reversals, you're going to be in for a very painful trading career, to be honest. Unless you're very skilled with economics and fundamentals and being able to sort of build a thesis before the market's priced it in, then fine. But honestly, you're best waiting for the reversal to just happen, miss the reversal, then catch the trend or catch the continuation, because catching reversals, like I said, is very, very difficult. But it's possible. So euro dollar, for example, and I've never tested, it's not the way I trade. So, don't just go and start trading like this. But the best you're going to really get, as far as I'm concerned, is using very high time frame levels. So monthly, weekly support resistance is pretty good. But of course, then you're going to have to be holding trades for a couple of weeks. But yeah, reversal is generally a pretty difficult to try and trade. Okay. Should I have a look at the equities? We've not really looked at them too much. Seems like the S&P broke support. Is it going to continue down, though, is the question. Doesn't look like it, actually. It's for the ICT traded people here. Is that what you call an FVG? Is that what you guys look for? Either way, though, it's bounced off this sort of previous structure. Looks pretty oversold on a short term. Weekly is looking, oh, sorry, this is the monthly. The monthly looks horrible. But if you are a bull, maybe now would be a good opportunity. But actually, I would wait for a break above these previous two candles, just sort of confirm momentum. But this is a potential stopping point here for the S&P. The Dow, I don't really have an opinion on the Dow either way, so I'm just going to skip over that one. NASDAQ also actually looks quite strong here. I might, yeah, if we can see some sort of bullish confirmation on this next H4 candle, I will consider taking a long because I quite like this. something like that back up to previous highs. I think that's quite a solid idea, but of course it's pretty risky because this sell-off's been quite aggressive, so it could be buying into a falling knife, but I'll do my best to avoid that. FVG sounds like a disease you get for a one-night stand. It does, actually. You know what, Ballout? You're ruining a lot of words for me today. If you trade crypto, can you comment on Dogecoin? No, sorry. I barely touch Bitcoin, let alone meme coins and things. Look at silver. I don't want to look at silver. It's just painful. Yeah, look at that. So I'm going to still manage the trade, but I think I'm going to have to cut one of these positions, probably the fourth position. But we will see. And the reason I'm holding silver is because I'm very bullish long term. So I'm still expecting $35 to get hit this year. But that will mean I need to reposition slightly, because obviously these were short-term positioning. I will need to then adapt it into longer-term positioning. So I'll have to probably cut 3 and 4 and then scale in potentially to lower price and sort of average my way back into the market and look to hold for a longer period of time. But yeah, it will really depend on how these levels hold up. Sort of between, where are we at now? So we're at 30, we're pretty much 31. We'll call it 31. So between 31 and 30, if we start breaking below 30, then I'll likely just cut all the positions and start repositioning again once we calm down. Oops, didn't mean to do that. But we will see. I mean, the silver is still on the Edge Finder as top setup. It's actually overtaking gold. Actually, no, it's not. They've both got 6, but we will see. It's been a very difficult time to be bullish on silver. James will never trade again. I don't think I will. I think I need another holiday. I just got back from Madrid. I think I might have to fly back again, just take some time off. Serial investor in Fartcoin. Jack, no, I'm in a few different positions. So I'm silver long, Swiss yen short, euro yen short, euro Australian short, euro CAD short as well. So essentially, I'm completely against the market at the moment, which is obviously very fun to be. Matt, you want to be involved in silver around 30.5? Okay, well, in that case, Matt, I will go full margin at 30.5 because I'm sure your entry is going to move the market, so I can enter and piggyback off your move. But yeah, I like the story for silver still, so I'm not concerned. It's just one of those things because I've been in since when was this? The 6th. So I've been in almost a month, coming up on a month. I was contemplating taking profits at these highs. I was sat and I was looking at the close button. I was thinking, should I do it? I was like, you know what? No, I'm not going to do it because I'm still bullish on silver. The only reason I'm taking profits there is because I'm greedy. So I'm going to let it run. I'll be disciplined. And now look what's happened. So I think it's just one of those moments where I'm just a little bit salty. But again, what can you do? Euro yen. Euro yen is fine, to be honest. I'm not really expecting anything from the yen pairs just yet. It's, again, like Swiss yen, like all the others, we're just stuck in sideways movement. So there is nothing to do. If you're not in the market, I would stay out really until we have a definitive move, either a rejection, a larger daily move off support, or a complete break of the support. Either way, you can't really do anything at current levels unless you're trading smaller time frames. Well, I'm glad you're getting grey hairs because my hair is completely receding. I'm going to be bald this time next year, I think. That's why I've started wearing hats. I've got that 40-year-old M haircut or M hair pattern. I just need my hair to grow back. The problem is I cut my hair way too short when I went to do my seminar. The guy didn't understand what I wanted, so I'm a bit annoyed about that. So now he's cut it too short so you can see how old I look. So just waiting for it to grow back and then I can take the hat off. Please talk about gold. We've discussed gold, but it's very similar to silver. I'm in no position to start selling gold. I think it's still bullish in my view. I don't really see that changing. I mean, it's had like almost a 50% rise in the past year. So to say that's completely done and you're selling the top now, I think is a little bit. Yeah, I'm going to say it's probably a bit overly optimistic. I mean, again, I'm quite upset. I could be very wrong. Maybe this is the top of gold, but I just don't see it. So I would be looking to be a bull at some point. Whether we come down to this level of support or we reject right here, I don't know. But yeah, overall, I would still say it's bullish, but it might just need some time to digest the recent developments. How do you calculate risk as building positions? So I start off with a mental stop. So let's say I was buying gold here for a hypothetical. My mental stop loss would be here. But the reason I've got a mental stop and not a hard stop loss is because if price does come down to here and I'm still bullish, my analysis hasn't changed, the fundamentals haven't changed, then I will look to scale in at this point. But this will be a 50%, sorry, not 50%, a 0.5% risk or 0.2. It could be very low. It depends. But this will be, you know, I will know at this level, this first position might be in a drawdown now of 0.5%. So I'll scale in with another 0.5. So that will make up the position to sort of 1.5 around here. Obviously, again, this is just hypothetical sort of example purposes, but that's generally how it works. So I'll work off a mental stop. That will be the risk calculation level, and then we'll take it from there. That will come off probably next week. I've got really thick hair, so it grows back quite quickly. But at the minute, I don't. You know, the internet lasts forever. I can't have a picture of me looking like a nutsack on the internet. Actually, seems like the markets are giving back a little bit here. Let's just see, what's the dollar doing? The dollar is giving up a little bit of ground. Like I said, it wouldn't shock me if we do see the dollar completely correct yesterday's move. This was yesterday, wasn't it? Yeah, yesterday's move. We will have to see, though, because markets can do anything, as they've proven. No, Basha, I didn't see your comment. What did you say? You've been mean. Max, yeah, I'm short Euro, Australian, and Euro, Euro CAD. So I think a lot of people are actually in the same boat at the minute. I think mainly retail, because obviously we, I think we are generally quite behind on market dynamics. We obviously know it's happening sort of as it's happening. But it seems like I said it earlier, and it's probably going to sound a little bit silly to some people, but I just don't see the markets moving as they should be now. When I say should be, I'm talking about data points. The data tells you where you can kind of expect price to go, and that's why being fundamental trader is so great. But when you get situations like this, for example, the dollar and the yen are completely opposite. The dollar, in my view, is not necessarily bearish, but it's definitely not bullish enough to warrant the bull moves it's having, and the yen is a lot more bullish than it's displaying here, really. But it's short-term noise in the markets. That's why I'm not really concerned. And also, just a quick thing for any new traders: when I say the market should move or shouldn't move or whatever, take that very loosely. This is a very specific situation. It's just the way I view the markets right now. To get into a habit of saying the market should do this or I think that, or fake markets, fake moves, whatever, it's very dangerous, and it can lose you a lot of money if you're not careful. Gold bull, James, you look like a gangster. No, I would maybe look like a gangster, but I'd also be single. Gold super scary. Don't touch it then. Oh, I don't care about swaps too much, Jenna. If swaps are there, fine. If they're not there, fine. Or if I'm getting paid, fine. I'm not going to let swaps decide a trade, or if I do or don't take it, but it will help me filter a trade. So like I'm yen bullish, and I'm bearish on the Swiss, so I'll go for Swiss yen because the swaps are non-existent because they equal interest rates. The weakest, I would say, is the Canadian dollar out of the CAD, the Australian, and New Zealand. Although the New Zealand dollar is not great either, but Australian dollar I wouldn't say is weak at all, really. I do watch Bloomberg, but not very often, if I'm honest. I'd rather be grey than looking like a kneecap. Well, fine. All right, then. You're not invited to my birthday party. Seems like gold is having a little bit of a bull move, but we're only 14 minutes into this candle, so it's a bit early to say. Anyway, guys, I'm done on the stream for this week, almost in a couple of minutes. So the link to Elite Trades has just been dropped in the chat. If you scroll up slightly, we have 7 days free, so you don't have to pay a thing. So if you want to try out Elite Traders for no cost, you can cancel at any time. You can do that. Again, there's no strings attached. You get all of our educational content, all our signals, you get everything for that 7 days. And again, no strings attached. When's my birthday? My birthday is the 7th of July, and I expect Nick or James or Chandler to remember that, so it's in the calendar. If I come on July the 7th and my birthday's not there, I'll be very, very upset. I'm joking, of course. Jack, I appreciate it. You too. I hope we can all go out, have some beers, and recover from this week. Go to the 1 second. I don't think I even have access to the 1 second. Oh, I do actually. No, I don't. See, I need to upgrade. I'm too poor to trade the 1 second chart. What is the lowest I can do? I think the 1 minute is the lowest I can trade actually, or look at. Yeah, it is. I think 1 minute. It is 1 minute chart. What have we got here, boys? We've got indecision candle. We need to go short gold. Follow the trend. It's currently very overbought, so we need to sell this move. I've got premium, Bashi. Don't disrespect me, but I don't have that premium. I just don't need it. I don't use more than 4 charts. I don't go lower than the 1 minute. So, you know, I might be a trader, but I still have respect for money. It's crazy. I think it's like double the price though, just to be able to watch the 1 second chart and have an extra 2 charts. I think you get 2 more. You can do 10 second on premium. So there's just no need. There is no need to trade a 10 second chart or even look at 10 seconds. And anyone that says you do, you're lying unless you're a quant trader. And I don't think there's any quant traders here. It's copium. Best time to buy trading view plans Black Friday. That is true. I think I bought mine on Black Friday, actually. I'm always discount hunting. Talking of discount hunting, if you want some discounts on the Edge Finder, you can use code ELITE. There you go. I'm sure, as you can tell, I'm a very talented, very skilled, very persuasive salesman. CAD pairs, I'm bearish on the CAD. Obviously, depends on which other currency you're trading against, though. But yeah, generally speaking, Canadian dollar, I would lean on the bearish side for now. Yeah, it's very cheap. It's very nice. You're bullish Euro CAD TP. Well, Roshan, we're in opposite positions. With the way the markets are going, you might actually come on top on this one. Camera angle is different on A1. So if you look at the camera on here, it's sort of thin. It's like a rectangle rather than a box. So I've got to sort of change it so half my head isn't hanging off the screen. Sell a lake house in Vegas if you're a salesman. I could sell the Edge Finder to an ICT trader. I'm joking. I'm actually really bad at sales. I don't think I've ever successfully done a sales pitch. Would you shave your hair and go bald like a monk? No. If I ever start going bald, I'll either shave it off and just wear a hat, or I'll buy a wig, or I'll get a hair transplant in Turkey. I don't think I'll ever go bald, though. My head is too sort of round for that. I'll look like a... yeah, I'm sure you can imagine. Jack, you did sales. Do you want a part-time job? Luxury cars. Do you want to sell a luxury trading service for me? I took a lot of BS like most gurus. Yeah, guys, elite traders and the Edge Finder can actually increase your win rate to 99.9%, and that 0.1% you lose trades, it's because you did it wrong. It's not our fault. Yeah, Roshan, I appreciate it, but I don't think I'll be in South Africa for a couple of years, to be perfectly honest with you. This year is likely Paris next month, I think, then Miami, obviously America, and then Indonesia. That's my travel plan. Maybe next year. We'll see. Anyway, is there actually, hold on, I just realized my time might be ending here. Is keep an eye. What time is Chris on? So Chris is Chris is on pretty soon, guys, so don't leave when I leave, but I'll stay until he's here. Really got to get myself a copy of the Edge Finder. My number one rule is that I need fundamentals line up in order to trade. 8 or higher. Last time I saw XAU was 8, 10, lost 2%. Darnell, use code ELITE if you do buy it. Give me your money. Ha 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 ha. Net worth is currently long live cattle. Yeah, all right. Fair enough. Never traded live cattle before. It seems to be coming up. I don't know why, but I saw it once, like 2 weeks ago, by one of my team. And ever since then, I've been hearing and seeing people talking about live cattle everywhere. I don't know where it's come from. I don't know if I've just missed something huge. Jack, appreciate it. I'm going to trade pound New Zealand and CAD yen. I would assume you're short CAD yen, but anyway, I will leave Chris with you guys. Chris Pulver is here to take over the show. I will see you all later. Hope you all enjoy your weekends. Don't get margin called in the last few hours of the market. That would be very, very sad. I will see you all next week. Have a lovely day.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Friday. It's been a bit of a week. We have 1, 2, 3, 4, 5, 6 daily candles in a row. It's been the pain train for the last week. Starting on Friday last week, that's when it really started to kick in. Friday's candle last week, I said that's the first real claw by the bears where it feels like it's taking on a mind of its own and possibly having some follow through, and it did. We are down from top to bottom about 5%. I don't think this is a big deal at all. I think there's more pain ahead. I just want to get people prepared. I did this in TradingView. I did this in some of my other sessions. I talked about this with a lot of my services. I'm looking at these big technical levels. It's pretty simple. If you are getting ready to kind of time this move, I'm not crazy bullish right now. I think there's discounts offered up, which is great. I think having buying power at the ready is great. Let me see here. If I were to got some buying power left, but not as much as I would like. Let me check something here. So that hedge is looking good for about $400 profit. That goes out to next Friday. Let me see with this one. What's my max profit here? $7 max profit. So 7 times 5 is, oops. Whole trade cost me $7. So 7 times 50. I'm actually somehow in more profit. It's showing more profit than what's my max. I mean, that's cool. Let me see if I can just close this thing down. So I'm up 107%. I do have a profit trap on this one. We're not even close to the profit trap, though. Let me see if I can just close this thing down for a win. Close. So can I close this thing out at 45 cents? I don't want to close it at 75 or 80. Let me see if I can close this thing out for 50 cents. 45 or 50 cents? Nope. 50 cents. Trade closes at spread. Hmm. 55 not filling. 60 cents. Okay, I guess it doesn't want to close. Never mind. What else? Copper. This hedge is still working out pretty nicely. Got the 61.75 by 57. That's up around $500. I'm gonna let this thing work out. That's out till April, so I've got time in that trade. What else? IBIT with some shares. That's fine. MicroStrategy, fractional, bull call spread. NVIDIA, ratio spread. That's out to April. Pfizer, the stock that can never go anywhere. It's like trading the euro pound. You want to trade the euro pound in a stock version? Just trade the Pfizer stock. Palantir, that's a ratio spread. Max profit's $1.40. I'm going to get some buying power back. I'm going to take this one down. Let's go 107. 34 cents. I mean, sheesh. Got to wait another 48 days. Pulled in $1.41. What's it trading for? Okay, I can get over $1 on this. I'm just going to take the profit. 35. 34 got filled. All right, I'm going to get some buying power back with Palantir. So I'm going to clean up some of my ratio spreads and look at some fresh trades. Equal weighted is fine. Fine. SLV, okay. SPX, just took profit on SPX today. Got some waterfall trades in. Those are going to be out to March and April. Those trades are good. SPY, this trade is a I've got mostly max profit in this one here. This is a 550 by 545 by 520. Max profit's about 209 with a profit trap, but profit trap's got to be below 550, which I don't think we're necessarily going to get. So I'm just going to take the profit, get some buying power back here. So let me see if I can close this 209 down for like 20 or 30 cents. 31 cents. Let me see if I can get it for 30 cents. Be generous. 32 cents. 33 cents. Ask price is 34. 33 cents. Got some buying power back there. Nice. Okay. So I'm closing up. That was a 550, 545, and 520. That was a SPY trade. Excuse me. Closed out the ratio spread on Palantir. Okay. So I'm going to keep an eye on that trade. Tesla, partial shares. XSP. Lots of trades in XSP. These are good, though. These are profit traps. I'm going to have to wait a little bit longer on some of these trades. This is fine, but I got some good buying power back. I'm doing that for a reason. Let me see if I can find in SPY. I'm just doing some trade management today. I do have a hard stop at 11 o'clock, team. I have a webinar coming up at 11. But I want to just take a look at a couple things here. So the 550, 545, what expiration was that? That SPY trade was a March 21st. So that was a March 21st expiration. My 550 by 545 by 520. Get some buying power back on that one. Close for 32 cents, hopefully. 32 cents got filled. Excellent. Get some buying power. The 550, 545, 520. Close, 32 cents. Filled. Very nice. Okay, so I'm getting some pretty serious buying power back because that was a naked put. So a naked put at 520. I'm going to get some buying power back. 1, 2, 3. Close, 32 cents. There we go. This one didn't have it. Those are fine. Okay, March 21st, closing 31 cents. Maybe I get an extra penny. Nope. Come on. 32 cents. All right, close at 33. 1, 2, 3. 32 cents. Come on, guys. 33. Okay. All right, I'm just doing some trade management right here, and let me get into some levels. Buying power I normally use. I still have about a third of my account in cash right now. About a third of my account in cash. I think that's the most important thing is having cash at the ready. Tongue in cheek compared myself to Buffett yesterday. Obviously, I'm not doing that in real life. But Berkshire Hathaway is sitting about 18% cash right now, like one of the highest percentages on record. And I'm sitting about 30% cash. So I'm doing that because I see the same thing. It's like I think there's better opportunities ahead. I think there's a good way to rotate. I think there's a good way to play the indexes. My goal this year is to eliminate a lot of the volatility. So anyway, buying power, I don't like to tie up more than probably 80% of my max buying power. And a lot of it is like small little trades that are going to risk, 0.25%. A lot of risks are under 1%. And I just trade actively. Right. I think that's a good way to kind of survive and spread it out so you're not doing anything crazy and stupid. March 21st, 1, 2, 3, close, 33, filled. Uh, 580. That was a hedge. I'm going to take this one off the table. That's a 111, 1, 2, 3. So this is a buy, sell, sell. This should be closing out for a Can I close this for a credit? Let me go for like a 1 cent debit maybe. All right. So that was a buy. Okay, now I got some buying power back. Good. So $1.30, close it out for $1.30. I'll take the winner there on the SPY. Okay, very nice. This one just has shares. This one. This one. There's my March 21st. I got to dissect this one. I've got to buy, sell, and a sell. That one should be okay for profit. This one is March 21st. Yep. So I'm gonna group these together really quickly. This is gonna be a 1-1-1-1. So group this as a 1-1-1-1. Okay, and then this other one for the March 21st expiration. That's a profit trap. That's a spread. There's another 1-1-1 trade. There we go. Helps me organize this a little bit. And then June 20th, those are out of the money credit spread. Here's a 1-1-1-1. This one's actually looking pretty good. This is a hedge, which is up around $900. And this is a, see what I can close this one down for. So March 31st, I have 7.28. Hang on a second. 7.28 plus 5.73 minus 12.35 minus 10.50. That can't be right. 605, 590. That's just a hedge by itself. Oh, these, okay, never mind. 605 by 5, these are hedges. Okay, so 605 by 585, 590 by 570. Got it. Got it. Okay, so these are net profitable. Let me see what this adds up to be. So I got 963 in profit, minus 62, minus 404, plus 168. I'm up $665 in that position. I'm going to close this one down. Yep. Let's see if I can get out of here for 1650. $16.45. Okay, so that trade cost me like $9, and I got out for $16.45. So 1645 minus 900. 1645 minus 900. Made about $700 on that trade. Good. And also get some buying power back. Okay, so now I just have a credit spread that's way the heck down here. And then my 1-1-1 trades, which are looking good for profit overall. I'll hang on to those. Okay, so nice little broad stroke of some buying power, which is what I was looking at last night. Taking some wins, closing those out. While I've got the next 25 minutes before I have to go, let's talk about some technical levels here. SPY crossing 58.95. So we poked that level. That was actually my trade from yesterday. I was trying to get out of a broken wing butterfly yesterday for a profit. Ended up taking a loss. Closed out some hedges for some wins. But anyway, it is fine. Just got a new computer trying to set up Discord, but not see your alerts. Here's my Discord channel. I'll share this it's going to be a 1-hour invite link. So invite people, edit link. This is good for the next hour. Chris Pulver trading Discord. Yep. So there's my Discord, YouTube channel, youtube.com/Chris Pulver. If you're in Pulver Alerts, that is with A1 Trading. So you want to follow the A1 Trading community Discord. Okay, so this is what I want to talk about. I mentioned this yesterday afternoon in my final hour session on YouTube. Look, all of these are the same. Okay, I'm going to bring up this little bar count workspace that I have, and it's pretty simple. I just coded this indicator with a little AI, and it just gives me a straight up bar count on the 200 moving average. Okay, Now, is this all I need? Well, it's a pretty simple combination because there's two levels I'm watching. Let me change this to, see if I can edit this. 200 EMA, I'll make it red. Okay, so this is my 200 moving average. This is all I'm paying attention to, but then I'm going to put in a trend line connecting the dots from April to August, right? So just hear me out. If there's more pain ahead, which I think that there is, simply because this is a nice bar count. We've already started this drop, so I think anything right now is probably a bit of a sell trade. I don't know this for a fact. Obviously, the market could come up and find the same highs again, and we deal with all this nonsense. This would be a bigger concern for me, is that we just stay, if we stay above this moving average for much longer. My concern is that when this thing breaks back down, it's going to be a bear market. That's my biggest concern. What I'd almost rather see is this. I'd rather see that these 6 days we've had of selling pressure are going to continue to mount additional selling pressure, and it's in this window between the 200 moving average and the connected lows from April support to August support to this being future support. Does that make sense? So roughly that is 5,700 on the SPX down to about 5,500. It's a 200-point area, and I know that's not perfectly precise, but I would say that if I'm looking at a bottom to form, or at least an area to get positioned and start to take some buy trades again and start to look long positioning with my option trades, it's that window that I'm going to be watching. Okay, so I will do this. I'll say 5,700 to 5,500. It's going to be that area, and I'll box this in. So there's my area right there. Right? I'm going to take a screenshot of this because I want to have this for my little list as well. So we're talking about this end of February, but that's a nice little level. XSP, same thing. Connect my April to August low, and I've got a 570. Okay, 570 down to about 550. With a box to go with it. Okay, take another screenshot. Does that mean that I need to be full on bearish going into that? No, I mean, I've been bearish this entire stretch. Once we hit all-time highs, I put on a hedge. Put in all-time highs, I put in a hedge. Those hedges are out to the end of March and into the end of April. Those hedges are still going to play out, and I'm still holding them. All right. SPY. Same thing here. Connect your April to August lows. It's going to be very similar to the XSP, which is going to be this window right in here. So it's about a 570 to 550 window. Okay, RSP is a little bit different. RSP doesn't have the same, it still has a bar count. Let me check RSP here. We actually tapped the 200 moving average back here in January of 2025. So my wonder on RSP is if we go high, low, lower, high, lower, low, do we start scooping up some RSP equal weight, allow this market to broaden, try to get back to these highs again, while the 490 stocks in the S&P can outperform as opposed to the Mag 7. Big rotation out of the top 10 stocks, big rotation out of Mag 7. That was pretty apparent yesterday. If you looked at the heat map from yesterday, right? This was, I mean, there were stocks that were green yesterday. It obviously wasn't all red, but your biggest rotation is just look at this: semiconductors trash, Nvidia, Mag 7. I mean, it's no longer a $3 trillion company. It shed, I don't know how many hundreds of billions of dollars in market cap, but that's scary stuff, right? And then your Mag 7, just big rotation out of them. You got some other stuff hanging in there, but that's what rotation looks like. Okay. All right. SPY. Let me take a screenshot there. I have SPX, XSP. Take a screenshot here of the SPY. Where the heck did my workspace go? There it is. SPY. Take a screenshot there. Okay. Even on the NASDAQ. NASDAQ is almost at the 200 moving average, but just in case we go a little bit lower, it is certainly known to be more volatile than the S&P. I'm going to say the 490 down to like 450. That's a big area. 490 down to 450. And I would almost be willing to say wait longer on NASDAQ than you would on S&P or Dow. And the reason why is because tech, with this rotation out of growth, out of momentum, into more defensives, lower beta, lower volatility, I think the NASDAQ could have a bit more of a correction. Now, it could be totally wrong, right? Like this thing could just bounce right off the 200 moving average and it's right back up to the highs, and that was your dip. Okay. So I might take a nibble here. Might. But I think if there's more pain ahead and the S&P still has to find the 200 moving average, there's clearly more distance to find the 200 moving average here, which means more pain in the S&P, which means more pain on the NASDAQ, right? So this is a wider zone, and I would say if I had my pick, that if we're down through this 200 moving average, then I'm going to start taking some nibbles. I don't have to be perfectly precise, but I'd say like between the 470 and 450 area, I'd like to get long on the NASDAQ rather than just bouncing off the 200 moving average. I think it's a little bit safer play to let the tech side like flush out a little bit more, right? And that's a pretty healthy correction. If we go from high to low here, that's a 16 to 70% correction. 16 to 17% correction. That's a healthy correction on NASDAQ, if you ask me. Okay. All right. Take a screenshot of that. All it is a 200 moving average. It's 200 moving average, 200 exponential moving average. That's it. Okay. Dow. Same thing here. Let's connect these lows. Here is your April sell-off, April to August. Boom. Dow's a little bit more in the tighter space here, but that'd be my window from, let's say, like 420 down to 400. 420 to 400. There. Right. Russell. Russell is already through the 200 moving average. IWD is the top thousands. I'm going to look to see how this one plays out. If it comes back down to revisit lows here, if it revisits lows, maybe I like some IWD. This has actually been outperforming the index. Is up like 4% for the year and hanging in there. IWY, I don't like as much because this is growth. I'm trying to move out of growth right now, at least for the time being. But also if it came in like this as an ETF is pretty cheap. So maybe just doing like a cash secured put, trying to get back below, like, I don't know. I don't know if I want to do a leap on this or not. The market's going to have to embrace this AI push again if IWY is going to start growing. If IWY is going to rally, it's going to be, the AI trade is back on and resuming and things are looking good. But this might be something I just want to stay the heck out of. IWX and IWD, that's value. That's value. I like this a lot more. So if IWX is top 200 growth for the Russell, if this is a range trade, if it comes up here, I mean, I'd like to see it maybe fall down to support again, but a range trade is possible. Otherwise, it's dirt cheap. I mean, honestly, if I just thought small cap value can improve or outperform, then I mean, the ETF. I mean, this ETF is only $83 versus like hundreds of dollars like you see on most. Okay, all right. Does that make sense? So, just a quick snapshot of where I'm watching the major indexes. Okay. Connect the April and August lows, and then looking at a 200 exponential moving average. It's that window that I'm going to start taking some nibbles, being bullish with options. A lot of my options probably going out 30, 40, 60 days, maybe going out 30, 60, 90 days. I'm really not overly excited from September. I'd say 9 of 2025 into December of 2025. I'm not overly optimistic in that window. So if we have a bounce here, I'm going to try to make as much money as I can before September. I don't know. That's my mentality for this year. My high for the year was about 195K. I have watched probably 90K of that go away in the last like 6 or 7 days, which doesn't necessarily mean a bad thing, but it's right there. 190,000. I mean, I'm up 100 grand. I'm still off to a decent start for the year, but man, I'm glad I padded those gains early in to give myself a little bit of resiliency. And now I will see where I'm at. So anyway, long story short is I want to be positioned for some success. I think the timing of this is something I need to watch, and this is I'm going to position for it. So if we see the opportunities here and we come back up to fight to those highs, I'm going to try to make as much money as I can in that environment, because once these highs are hit again, I don't know if we just go higher. I mean, this might be a dip back to the highs. The market clings to like a 0 to 5% gain for the year. But if we just chop around and have like this look, something tells me that 2026 looks a little bit worse, So I'm not going to get super greedy. I might join the Buffett band camp and just wait for better opportunities. But I think at least for this first real drop, before inflation is truly sticky, before the Fed takes any action in monetary policy, and maybe we get the initial Trump policies, which is just heavy in tariffs and heavy in uncertainty. We start to see there's something implemented with. And also heavy in layoffs, by the way. I mean, we're cutting jobs left and right. Like federal workers are getting laid off like crazy. In the background, tech's been laying off people as well, and it's starting to trickle into other sectors. But see what I'm saying? Like, there's a lot of stuff setting up for maybe some fragility and some uncertainty in the next, let's say, 6 to 12 months. And I don't want to be left holding the bag if we're going to have a true like 20, 30, 40% correction in the next 1 or 2 years. Another thing that I would say, this is like worst case scenario, but I preface some prefaces for some clients this week, is let's say that we don't stop. Okay, let's say we don't stop at this 200 or this box, right? This is my area that I'm watching. Let's say we don't stop here. Well, this is another thing you can put on your chart. Just have it on your radar. And you can remember that we talked about it. This is a 5-period yearly average. 5-period yearly average. And if we can survive in this area for 2025, I don't think we go through 2026 without finding this yearly average. And that's where things are going to get a lot worse, because now we're talking corrections in the 20%. Now from these highs, you're talking a correction of around 23%. That as an index is going to be a lot of pain, right? I mean, that would be classified as a bear market like we had back in 2022. It's not to the extremes of great financial crisis like we had in 2008, but it's not great, So I would be optimistic that this is a spot that the market can bounce. Okay. But going into 2026, I think that this gets hit. And this is a moving average that's not going to move very fast. So this is always going to be trailing current prices by about 20%. So if we're back up near these highs, this is about a 20% correction away. And that is going to feel like crap. So, make sense? All right. That's where I'm at. That's all the major indexes. That is SPX. That is XSP. That is SPY. Obviously, those are the same. Those are representing the same thing. That's S&P 500. Index. That's an index. That's the micro version of that. And then you have the SPY. Then you have the QQQ. Then you have the DIA. I'm not putting Russell in because the Russell's already pulled back. I'm going to try to figure out whether I want to trade Russell growth or Russell value, probably Russell value. And then NDX would be very similar to the QQQ. So watching, connect to April, connect to August, and then put in your box between that support as well as that 200 moving average. And that's the window I'd be watching for tech. The smart play for me this year is probably not a lot of QQQ exposure. Mostly SPY, DIA, rotating into RSP, QQQE, trying to keep more equal weight, take down the volatility as much as I can. Okay, all right, I've got a few minutes left. I'm going to go here in about 7 or 8 minutes. Currency strength on the day. Let's go oil, gold, silver, Bitcoin, stuff like that. Here's currency strength today. We got Japanese yen softer, Aussie, New Zealand softer, Swiss softer. The dollar's up here with the pound, the euro, and the CAD. Japanese yen, another crazy volatile day, up to the top where it was the strongest currency. Now it's the weakest. Welcome to the world of the Japanese yen. Currency pair-wise, dollar index catching a bid for the last couple of days. I said watch this 106 to 105.50 zone. It came down to 106.15. Yields. Okay, 10-year yields are down to 4.25. That's down about 55 basis points from these highs. That's kind of nice. It'd be lovely to see if we have more pain ahead in the markets. I'd love to see this 10-year yield rip down a little bit farther. It'd be, I mean, I'm saying this selfishly because I've got a house to close on in about 45 days, and I'd like this to be as low as possible. I'd like to see that translate into my 30-year mortgage for whatever that price looks like. Hopefully, we're closing mid sixes or low sixes, and I can buy it down. Maybe sub six would be kind of nice. We'll see. But anyway, I hope this continues to slide a little bit lower. If we get a little bit stickier here on the 10-year, that's not going to be a huge surprise. I'll just throw this out there. If you're lucky, you're going to see a range on the 10-year. Okay. Where things get really painful is if we start to see another uptrend. Okay. Higher highs and higher lows, higher highs and higher lows. And that means that the Fed is completely losing control of inflation and restrictive monetary policy. And the markets are telling, the market's telling us one thing and the Fed is preaching another story. So I don't know how that plays out, but I just hope for right now in the interim that we're going to go a little bit lower as the pain is happening. And let's see if we can flush down to those levels I just noted. And that hopefully brings the 10-year down a little bit softer. So if we can come back down to these levels, that'd be pretty nice. But I don't think this is necessarily going too much lower than where we had these lows before. So, and to put this in reference with the 30-year mortgage, when we were here at 3.6% on the 10-year yield, 6.05 was the 30-year mortgage. Isn't that crazy? Like 250 basis points different between where the 10-year yield is at relative to your actual mortgage. It's like, and the Fed funds rate, meanwhile, when they cut it down here, the Fed funds rate is now down to 4.25 and 4.5. And this is up to 7% mortgage rates. This is down to 6% mortgage rates, and this thing is moving 100 basis points. So it's kind of crazy how it all like mathematically plays out. But a lot of the financing, auto loans, refi, anything for business, a lot of that stuff is coming due later this year and into 2026. If people are wanting to grab money and people that have raised since COVID, this is going to be where they're looking to hold their hand out again and re-up for raises. If they're going to raise at 4.5%, that's a lot different than raising at 0%, raising at 0.25%, raising at free money essentially, right? It's a lot harder to cover a 5% arbitrage than it is cover a 0.25% arbitrage. All right, a couple things on currencies, then we'll go. So let's go dollar, gold, silver. Gold selling off, which is expected. We're pulling back to some decent moving averages. Here's crossing the 21. I like the 50 and 100. Again, I take some nibbles on gold. Previous resistance here, maybe an aggressive bounce. We'll see if gold is bid immediately, then we could bounce past resistance becoming support. I'd watch for that level. I'm going to wait a little bit longer simply because it's the same thing as I mentioned earlier. Look at this bar count on gold. Okay, there's my bar count, 355 bars. If I connect, and this is going to be interesting, if I connect some of these lows, okay, connect the lows somewhere in this window. So there's a hand-drawn trend line just connecting the dots. Connect the lows, connect the lows. This has been well above the 200 moving average for a while. This is the last time that we hit it. So there's your 355 bars. And so between this 200 and this outer trend line, that's where I would take some bites on gold. Right? And gold may not pull back that much, but I hope that it does. I hope that it does for really, like, this would be like longer term positioning. I would love to see gold at 6 to 12 months out just get back to these all-time highs, but have a respectable pullback. If gold can pull back here, maybe around 12 to 15%, yes, please. Because if I get that pullback, let's say we pull back towards this 200 moving average, and then we do end up making the run towards 3,000, that's a 15% rally. I would take a 15% rally in anything, let alone gold, which I think is a good safe haven to having, 10, 15, 20% portfolio allocation is good. I'm good with that. Okay, gold, silver. I still like silver quite a bit. Pretty well supported at 29, extremely well supported at 26. I want to see if we make some higher highs on this. Bitcoin certainly seen better days. A lot of volatility here. Long wick to the south. Maybe this was the test and buying opportunity around that 75K mark. Maybe the pain's not done yet. I don't know. MicroStrategy as a proxy, holding green around this 250 handle. So I've got my break even on MicroStrategy around 263, covered call around 310. Bitcoin gets a bit of a rally. That's good. I'll get this thing called away. I put in some extra trades on IBIT this week. Some income trades down in the low 40s. We're sitting around the 200 moving average, previous resistance. So just keep an eye on this. I think technically, Bitcoin has certainly been facing bigger drawdowns in the past, but I just think it's a larger instrument. It's more accepted. There's certainly more order flows into it. This became one of the fastest growing ETFs ever. GLD took like 8 years to get to, I don't even know what it was, $100 billion or something, and it took Bitcoin. I could be wrong. What is the market cap here? Does it show market cap? No. I don't remember if it was like 100 billion or a trillion. Doesn't matter. Either way, like whatever GLD took 8 years, and it took IBIT less than 1 year. So just like it's a pretty serious asset right now, but it's not going to come without having some serious volatility. Okay. All right. Currency pairs. I'm just going to do a couple. I literally have to leave in 1 minute. I still like my Swiss crosses, even though they are watching a lot of these gains. Just go back to it's a reset. I like Aussie Swiss here at the bottoms. Okay. And I'm willing to dollar cost average into flash crash lows. I think that's a pretty good spot. If we go to CAD Swiss, same thing, investing at the lows. Investing at the lows, at least taking it back to a range level. So that's profit target. If we go higher than that, then it's a swing trade to symmetry. But I still like the trade. I'm just sitting and collecting a little bit of positive swap. Euro Swiss, still holding long on this one. Pound Swiss, fine. New Zealand Swiss, similar to Aussie Swiss. Tapping these fresh lows, kind of reallocating at lows and flash crash lows. Dollar Swiss, I'd love to see this thing pull back even deeper. I don't know if it's going to. But I'll wait. If we pull back in like 85 or 84, I'm buying more dollar Swiss. Dollar CAD, does anybody care? I'm out of it. This could be a nice swing trade if anybody's interested. I hated the fact that we did that swing, but this could be left tip, center tip, right tip. We could have a swing trade back down to rebalance. But I don't trust this dollar CAD at all. This trade that I took that was long to 145. I'm super happy I got that trade and it worked out. I loaded up a bunch of positions and stacked them up to that target level. From that point, I'm out of it. I don't really care what this thing does. If we pull back to this area, this is nice resistance. I think this becomes high, low, lower, high, lower, low support. And I think the dollar CAD probably heads higher. I wouldn't be surprised. I mean, if we look at the state of the economy, I think that Canada is probably in a lot rougher shape than the US. So that's that. Pound dollar. All right, I got to bounce actually. It's 11 o'clock. Jump into another webinar. Pound dollar, if we break this trend line, looking to go on the right-hand side, a lot of this is just dollar index related. So, all right, hard stop at 11. I got to bounce. Thanks for being with us today. Happy Friday, and have a great weekend. Let's come back and grind this out for the month of March. All right, thanks, everybody. See you.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.